Hi guys, welcome to BCCA. This is TEJA and I'm your faculty for Corporate Financial Reporting at CMA final level. So in this video, I have made a brilliant analysis of all the recent past examination questions of our institute, and I will also explain whatever the concepts which are there in that examination. And I have also selected the chapter business combination, and I have made a comprehensive video which is going to cover all the concepts along with the questions as well. I will be attaching the video next to this video, and trust me guys, this is going to be the best video in the market till now because I have made that much in-depth analysis. So coming to this video, I am very much happy and excited to announce the recent upcoming batch, which is for paper number 18, that is corporate financial reporting, and that is going to be in 100% English. In this video, I am going to explain the key features of this batch. So the thing is pretty simple. We are planning to come up with both regular as well as fast track batches which are going to commence from 18th of August 2025, which is from next Monday onwards. And trust me guys, these are going to be applicable for December 2025 and upcoming attempts as well. Sir, my attempt is in June 2026. Can I take these classes? The right answer is yes, Baba. 100% you can take these classes. The reason is pretty simple. CFR is such a subject which will not undergo frequent changes. So that is the reason you can completely take these classes. And next, I want to comment upon the books which I will be issuing. The things are pretty simple. I will be giving you a handwritten concept book. Along with that, I will be sharing with you a best sort of workbook. And trust me guys, this is going to be a one-stop solution for all the institute study material questions along with previous year examination questions. And not only that, all the model test papers, mock test papers, everything will be included. Along with that, whatever the recent questions which have been given by our institute in the form of workbook questions, the same are also included in this workbook. Currently, I am preparing this workbook and this is almost 90% done. So what I have incorporating is, once again, I am just checking whether all the relevant workbook questions have been included or not. So this is going to take a little bit time, and books are going to be dispatched from September 1st. I want to make this thing clear. Books will be dispatching from September 1st. So till that date, whatever the classes or whatever the content which I have been taking, that will be shared as a soft copy to you. Fine. Yes, sir, whatever the classes which you are taking, what are the mode of classes which are available? It is very simple guys. These regular batches will be undertaken as both recorded as well as live, whereas this fast track batches will be available in recorded format only. Clear? Yes. So the next thing, what are the benefits which we will be getting when we take these classes? So trust me guys, after taking these classes, what I will be doing is I will be coming up with super 50 questions which will be uploaded in YouTube, and I will be again coming up with bullet MCQs which also will be uploaded in YouTube. But the real advantage is if you have taken my regular classes, so whatever the methods which I will be using in the regular class, if you observe this also, this is going to be beneficial for you because the methods will be same when it comes to the regular batch and these super 50 questions and bullet MCQs also. So along with that, I have observed from many students that they are facing difficulty when it comes to last day before examination. The reason is also pretty simple because of the quantum of the syllabus which is there in this CFR. Students are little bit confused about, sir, what are the topics which we have to really cover the day before examination. So I will be coming up with a detailed strategy which is going to cover the last day preparation. And along with that, I will also conduct a live session the day before examination in the name of War Room. I will be there with you the day before examination, and I will be explaining all the relevant things. Whatever the questions you have to solve, everything will be taken care of me. You can place a complete trust upon me. So along with that, if any student got any doubt, we have created a separate Telegram groups for exclusively each CMA final subject. I can proudly say that we are the only ones to have a separate subject, separate telegram group for each subject, and we will be there, I will be there specifically to this subject CFR to respond to all the doubts which you will be having. Whatever the time you just post the doubt, I will be replying as soon as I see those messages. If you have any queries, feel free to contact the numbers which are displayed on the screen. And if you want to purchase the classes, you can directly go ahead at BCCA app and you can purchase the same. Currently, we are actually giving a flat 30% off on all the classes. So even the CFR classes also will be available at the same discount. And trust me guys, hurry up, you have to be hurry up because this is going to be a limited offer. So what assurance which I can give with respect to my classes is, I have already made a video when it comes to business combination that I have explained in a complete logical manner. So even though if it is a revisionary, still I have made a brilliant analysis. Brilliantly I have explained with the logic, and not only that, I have also solved the questions as well to give you the confidence that whatever the question which they have given in the examination, you can easily solve that. So this is just a sample demonstration of how my teaching is going to be. So please watch the video till the end, whatever the analysis which I have made, and then purchase these classes. You can get the best benefit out of it. Trust me guys, I will never make CFR boring. With my knowledge, with my experience which I have gained post qualification, I will definitely make the CFR a very interesting subject, and after taking my classes, I can confidently say that you will definitely get a 90 plus. Okay, fine. So that's it. I am waiting for you to meet at the regular batches, and that's it, guys. Thank you so much, and very all the best. First of all, what I did is I have completely analyzed a detailed analysis I have made with respect to the past papers of the subject corporate financial reporting. I have analyzed the last 4 attempts, which is including the recent attempt which has happened in June 2025. So what I have analyzed is, you all guys have noted the first question is related to MCQs. Other than the first question, if you observe, we are having 2A, 2B, 3A, 3B, 4A, 4B. Fifth question we are having, and sixth also we have 7A, 7B, 8A, 8B, 8C we are having. So totally we are having 7 questions. So what I did is I have analyzed as to which in chapters, what are the chapters which the institute is recently asking, and I have exactly predicted the trend. If you observe these first 3 questions, 2A, 2B and 3A, they are mainly focused on specific indices. That too, their main focus, if you observe this 2B, they have never missed a question with respect to the Ind AS 36, which is related to impairment of assets. So that is that never a student have to ignore this standard Ind AS 36. If you observe first question 2A, they are generally focusing on asset related standards. However, in June 2024 and December 2023, they have focused on Ind AS 116, which is leases. If you observe this 3A, this is little bit difficult to predict because sometimes they are asking revenue standard Ind AS 115, sometimes they have asked Ind AS 102, which is share based payments, and sometimes they have asked this Ind AS 113, which is fair value related standard. Again, if you look at the 3B, their main focus is only on 2 areas. One is with respect to goodwill calculation, and another is with respect to intrinsic value of the shares. These two are also related chapters, guys, but if you observe the last attempts also, their main focus is only on goodwill calculation. If you observe 4A, their main focus is on financial instruments or NBFC provisioning norms. That too, they are giving main importance to this chapter, which is financial instruments only, guys. After analyzing this, if you come to 4B, there is not even a single attempt wherein the question related to this concept, internal reconstruction, is missed in the exam, which makes this chapter, internal reconstruction, a very important thing. Next, if you observe the fifth question, there is another topic which is not at all missed even in a single attempt, and which is nothing but business combination, which is of Ind AS 103. You have to remember this standard, guys, because I am going to link this standard with the after discussion which we will be going to have. If you observe the sixth chapter, another common question which is not missed even in a single attempt, and that is nothing but consolidated financial statements, which is related to Ind AS 110. If you observe 7A, their main focus is basically towards this economic value added and market value added statements. Sometimes they may ask this value added statement, and alternatively they have been asking one attempt. If they ask value added statement, next attempt they are going to ask economic value added. Like this, they are following a similar kind of trend, I can say. This is predictable, obviously. If you look at this 7B, their main focus is with respect to reporting part, XBRL reporting, sustainability reporting, CSR reporting, and the last is integrated reporting. If you observe, this is with respect to the chapter which is recent developments in financial reporting. If you observe 8A and 8B, they have asked it on this chapter, which is government accounting, which is going to be a completely theoretical portion. This is just a small chapter, but still it is having a good amount of weightage, because this is also one of the chapters which have not been missed even in a single attempt. If you even check 8C question, they are asking with respect to Ind AS 28. This is going to be a consolidation with respect to equity method, which we'll be discussing afterwards. If you look at this, associate becomes subsidiary, they have tested, and the next part is how to find out the goodwill, whether partial or full goodwill. And the last one also they have analyzed, which is associate becomes subsidiary. So this is a detailed analysis which I have been made with respect to the past papers coming to the subject corporate financial reporting. So what I have observed is, having been received different opinions from different students, the most common thing which most of the students are feeling is this business combination chapter is the most toughest one, and I have understood that most of the students are taking this chapter business combination as choice. So what I have decided is, I am going to prove that you guys are completely wrong, because business combination in days 103, if analyzed perfectly, if you guys have understood how exactly we have to tackle this subject, this is going to be a game changer. Because from the examination perspective, if you observe this fifth question, which is having a weightage of 14 marks, and other than this, if you observe the last question 8C is also having some indirect connection with the chapter business combination, which is going to fetch some 4 marks. So the total is 22 marks. And not only this, sorry, it is 18 marks. And not only this, sometimes they are asking MCQs from the business combination, approximately 2 to 3 MCQs they're going to ask, which means 4 or 6. So if you put together, the total weightage comes to 22 to 24 marks they are going to ask from the chapter business combination. So what I have did is, I have analyzed this question number 5, detailed breakdown of concepts as to whatever the items which I have analyzed, what are the exact topics which they have been tested. If you look at June 2025, they have asked about step up acquisition, wherein some concepts have been involved, and I have clear cutly given the bifurcation of which of the concepts are being tested in the respective attempt. Even if you check December 2024 also, I have did the same. The question which they have given is the reverse acquisition, and what exactly are the concepts which they have tested also I have summarized here. Same with June 2024 and the last one, that is December 2023 as well. The same kind of analysis I have also made for the question number 8C also. Same thing guys, question type, last 4 attempts, what are the concepts which they have been tested. This thing I have summarized. A brilliant student will think in this manner. First, what will he will be doing is, he will be first analyzing the concepts and the areas wherein which are recently being asked in the examination, and he will carefully adopt the same strategy while doing a preparation for this chapter, which is business combination. So what I have did is, I have completely crafted a brilliant video which is going to cover this chapter, full chapter business combination in days 103. And trust me guys, if you watch that video, your opinion is going to change, that business combination is one of the toughest chapter. That opinion will never be with you if you have watched the full video along with the questions which I have been solved. So whatever the questions which I have picked and whatever the handwritten notes which is there, that will be uploaded in the BCCA app in the free resources. You can follow you can go ahead and download it and you can watch the video completely. Trust me guys, if you watch the video completely, your opinion is going to get changed and you will definitely fetch a minimum of 20 marks from this, 22 to 24 marks from the chapter business combination. Because trust me guys, I have analyzed, I have basically solved many of the questions which are related to institute study material. I have taken some questions which I feel important from the institute recently released workbook also I have included, and exam questions also I have solved in that video. So not only just concepts, but also I have solved with the relevant problems as well. So what you have to do, sit back and relax and watch the entire business combination, which is going to be a brilliant video, wherein I have explained a complete logics. Even though it is a revisionary, even though it is not a regular class, this is just a kind of sample demonstration of how my classes are going to be. So what are you waiting for? Completely watch the video and take the best benefit out of it. And I'm hoping you guys to meet you in our regular batch, which is going to be start very soon. So all the very best guys and watch the video till the end. So hi guys, as we have discussed, our agenda is pretty simple guys. You guys have to get full out of full marks from this standard or this chapter, which is nothing but Ind AS 103, which prescribes the accounting for business combination and restructuring. Correct? Yes guys. So what I am assuming is, I am assuming that you guys have known nothing about this standard, which means I will be starting entire standard from the scratch itself. So what I am suggesting you guys is, if you guys have not understood about a certain point or something like that at the first instance itself, I want you guys to be little patient and watch the video further, so that things will be getting clarified over the time passes. Even if you are watching this standard for the very first time, I will still make sure that I will be taking all the relevant examples which will make you understand the concept. That is my responsibility guys. So in this video, what I will be doing is, I will be definitely explaining the concept behind the standard, plus I will be solving n number of examples, n number of problems, institutes problems, every study material ka question which I feels important, I will be picking in this revisionary series. But what should I say? Don't assume it as a regular series. This is going to be a little bit fast, but I'm saying even if you are watching it for the very first time also, you will still understand. But what you have to do, you just have to be a little bit patient and you have to watch this video further, so that things will be getting clarified. Clear? Yes. So without making any further delay, let us directly start this Ind AS 103, which is accounting for business combination and restructuring. Okay. Before starting into this standard, I just want you to explain few instances where exactly the applicability of this Ind AS 103 will be starting. Clear? In order to understand this, you have to imagine 2 to 3 instances of what I am exactly explaining now. If you guys are having enough clarity on whatever things I am explaining now for the next 5 minutes, then trust me, you will be easily understanding the applicability of the business combination. Clear? Yes. So the first one, what you have to understand is, sir, if there is one company which is called as investor, if it invests in equity shares of another company, if the shareholding is less than 20%, if it is less than 20%, for example, assume there is an investor who is investing, for example, 10% in another shares of company, in equity shares of another company, then what you have to do, this is just a normal investment. Sir, what is the meaning of this is just a normal investment? Arey Baba, assume I am there, I am an individual. If I want to purchase any shares of Reliance Limited or Jio Limited, can I do that? Obviously, I can do that. There are stock exchanges through which I can purchase the shares. Correct? Yes. So what I did is, let us assume I have purchased some 1% or 2% of Reliance shares or Jio Limited ka shares. Can I say that I have the power to control this Jio Limited, or can I say that I have the entire control, or whatever the decision which will be passed by the Jio or Reliance, that will be only considered after considering, that will be only finalized after taking my approval? Can I say like that? The answer is no, Baba. If you are just holding a nominal percentage, for example, some 5% or 3% or 10% like this, or for that matter, if you are holding less than 20%, you cannot say that you have the control of that company, or you cannot say that you are having some influence called as significant influence, which means that is just a normal investment. That's it. Clear? Yes. If your investment, if your share of investment, if it is less than 20%, Are Baba, that will be considered as a normal investment, and Ind AS 103 will not be applicable in this case. Sir, can you give me one example? Definitely, I will be giving one example, guys. You can just check this part. For example, there is one person who is called as CMA, that is me only. Let us assume I have acquired 60,000 equity shares of ITC Limited. You all know about this ITC Limited. So what I did is I have acquired some 60,000 shares of ITC Limited. If you check in the example which I am taking, I am assuming ITC Limited is having some 10 lakh equity shares. If you calculate the percentage holding of my percentage, basically if you calculate the percentage of my shareholding, it comes around to somewhere around 6%. Sir, 6%? Yes, Baba. It is nothing but less than 20%, which means you have not acquired any control. Yes, so you have to account this investment as per Ind AS 109. Sir, what exactly will be saying in this Ind AS 109? Are Baba, that is very simple. For example, assume you have purchased this 60,000 shares. I am just taking an example that I have purchased it for some 10 lakh rupees. Okay, what will be the entry which I will be passing in my books? I will be passing very simple. For example, investment in ITC Limited. I will be writing some 10 lakh rupees, obviously, and I will be crediting the bank. Correct? This is nothing but some 10 lakh rupees. Okay. This is the entry which I will be passed, and this is the accounting treatment which will be prescribed in this Ind AS 109. So our agenda is not to discuss about this Ind AS 109. This will be discussed in a separate standard because that is also a very important standard from the final perspective. Clear? But still, okay. So I have purchased it less than 20%. So as you have said that you will be following normal investment. It is a normal investment, nothing control you have acquired, and no influence also you are having over the company. Clear? So that is quite normal. Now the next part. Sir, now if you check this second case, here what they will be saying is if you have purchased more than or equal to 20%. Okay, I have purchased more than or equal to 20%, but it is less than 50. But it is less than 50%. Sir, can you give us an example? Definitely I will be giving one example. Here what you have to understand is investee company will become your associate. Okay, this is already you guys have known at your CMA interlevel or even CA interlevel also, the definition of associate company. Associate company is nothing but if any person is making an investment of more than 20%, more than or equal to 20%, but less than 50%, then such investee company will be called as associate company. Okay, if you want an example, if you look at this, assume there is one company which is A Limited, and in ITC Limited, the same example which is having some 10 lakh equity shares, assume that A Limited have purchased some 3 lakh shares of ITC Limited. If you calculate the percentage holding of A Limited, it will comes to something around 30%. If you calculate 30% is obviously more than or equal to 20%, but less than 50%, but less than 50%. So this ITC Limited will become an associate of A Limited. Okay, I have understood. It will become an associate of A Limited. Now you have to understand something which is very important from this standard perspective. So here what should be the accounting treatment or what should be the things? If you understand here, this A Limited will say that, Are Baba, I am having some 30% shareholding of ITC Limited. Still, if you observe, after having 30%, I do not have the total control of this ITC Limited because 70% of shareholding belongs to some other persons. So if you observe, if you take the decision making capacity or things like that, that is not obviously with me because I am just holding 30%. If you observe, which means 70% of shareholding is being held by some other persons. So that, but still I can say that I can have some kind of influence over ITC Limited, but ultimately I am not having control. if you observe the exact words which are being spoken by me, here I am saying, Are Baba, I am not having exact control over ITC Limited, but still I can have something called as significant influence over ITC Limited. Of course, I cannot make decisions on my own, but if I want, I can combine with some other persons, and I myself, after combining with those other persons, have the capability to make decisions on my own. Which means if you observe, I have a power, but not on my own. If I want, I can combine with other persons and I can exercise my influence, which is also called as significant influence. So what you have to understand is, I want to show to the public that I am having significant influence on this ITC Limited, because ITC Limited is not a normal thing. It is obviously a big company. Therefore, I want to show my status to the public that I am having significant influence over ITC Limited. You all know about persons in India. You all know about the show off which they will do. Correct or not? See, even if something is not their own, still they can showcase to the public that it is their own. So that is the mindset of Indians. So obviously, if I say that, Are Baba, I am having some significant influence in any other entity, then obviously public will not believe that. Okay, so the standard setter observed this situation, and what they did is, okay, we have understood your problem. You want to show your status to the public that you are having some significant influence. So what we want you to do is, you prepare 2 sets of financial statements. Okay, it is asking this investor, which is A Limited, to prepare 2 sets of financial statements. One set of financial statements is your normal financial statements, which means your equity share capital, your liabilities, your assets, your P&L account, your incomes, your expenses, everything will be related to you. That is the normal financials which you will be preparing. That is called as SFS, which means separate financial statements. If you are preparing this separate financial statements, Are Baba, you go ahead and follow Ind AS 27. Sir, what is that standard? Are Baba, that standard is very, very simple. I don't want you to pay any attention to this standard, because that is very, 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 very simple. Our agenda is to focus only on Ind AS 103. So this I will be explaining afterwards. Trust me, it is just a single liner. So I am not explaining this now. Our focus is very simple. This standard will be applicable. This Ind AS 103 will be applicable only to prepare consolidated financial statements. But hold on, guys. Even in this case, where you are having significant influence, here also you have to prepare definitely a second set of standard, which is consolidated financial. You have to prepare a separate set of financial statements. Second set of financial statements, which is called as consolidated financial statements. But sir, still will Ind AS 103 comes into picture as of now? The right answer is no, guys. Even in this case also, Ind AS 103 will not come into picture. Sir, but you are saying you have to prepare 2 sets of financial statements. You are saying that one set of financial statements will be called as separate financial statements, and other set of financial statements will be called as consolidated financial statements. So now what we have to do, in order to prepare this separate financial statements, you go ahead and follow Ind AS 27. But now while preparing consolidated financial statements, when you are having significant influence, which means your associate company, you have to do consolidation, but that is as per Ind AS 28. But that is as per Ind AS 28, and the method which they will say is, this will be called as equity method. Okay, this also I will be discussing a little bit later, but our objective is not this equity method as well, guys. Have you understood this point or not? If you are having significant influence over another entity also, you can prepare consolidated financial statements, but not as per Ind AS 103 or as per Ind AS 110. Clear? Yes. So now we have to follow which standard, Baba? You have to follow Ind AS 28, which is nothing but the equity method. Understood? Yes. Now the most important part which will be relevant for this standard, if you observe this, it is called as, if you are holding more than 50%, if you are holding more than 50% of equity shares in any company, that other company will be called as your subsidiary. That other company will be called as your subsidiary, and obviously you will become parent company. And obviously you will become parent company. Here you have to understand one thing. Are Baba, assume this case, you have purchased some more than 50%, which means assume you have purchased some 60% of shares of Reliance Limited only for that matter. In this case, if you observe, do you have the power to make decisions? Are Baba, answer is yes, because in a country like India, if you want to pass any ordinary resolution, you have to get more than 50%. Here you are having more than 50%, which means you have the power or you have the control to make the decisions of the company. Correct or not? So this, in this case, in the case where one person obtains control over the another entity, the word is very important, guys. This word, which is control, is very important. Investee company will be becoming your subsidiary, which means investor company have obtained the control. Now you have to understand this will be treated as business combination. This will be treated as business combination, and here also the same logic will be applicable. Sir, me as a parent company, me after acquiring control over the entity, I want to showcase to the public, I want to show my status to the public that I am having control over one entity. Sir, how will I show my control to the public? Are Baba, simple, by preparing two sets of financial statements. One set of financial statements, SFS, separate financial statements. Are Baba, that you have to follow as per Ind AS 27. That you have to follow as per Ind AS 27. And the second set of financial statements, Are Baba, the area where our focus will be as per this standard. So while preparing consolidated financial statements, you are having two standards which you have to follow. Okay, you have to follow as per Ind AS 103, but this will be followed only on the date of acquisition. Sir, what about after each reporting period? Are Baba, you have to prepare CFS for each reporting period also. But while preparing CFS for each reporting period, you have to follow something called as Ind AS 110. Clear? Yes. To summarize, assume there is investor company which is SNR Limited. From now, this investor company will be also treated as either holding company or parent company also. Assume it is purchasing some 6 lakh equity shares of ITC Limited. ITC is having only 10 lakh equity shares, which means it have purchased some 60%. Assume the date also I have taken, that 16th July 2024. Now, ITC Limited will become subsidiary of SNR Limited. Correct or not? Now, SNR Limited will be preparing how many sets of financial statements, Baba? 2 sets of financial statements it will be preparing. If you check this separate financial statements, it will be prepared as per Ind AS 27. And if you check this consolidated financial statements, Are Baba, while preparing consolidated financial statements on the date of acquisition, which means 16th July 2024 in our case, Are Baba, you please go ahead and follow Ind AS 103. And on each reporting period, which means 31st March 2025, 31st March 2026, 31st March 2027, which means year end date for all the subsequent years, you still have to prepare consolidated financial statements, but now you have to follow this Ind AS 110. Clear? Yes. Now, I also want to explain one logic that, sir, why this CFS needs to be prepared? Are Baba, simple. See, there is very simple logic. Assume you have gone after qualification, assume you have gone to the BMW showroom and you just wanted to purchase one brand new BMW car. After purchasing that BMW car, those company people, those BMW company people will be obviously handing over the key to you. Correct or not? They will be handing over the key to you. At the time, while taking that key, you will be clicking one photograph, and obviously you will be keeping status in WhatsApp, Instagram, or what should I say, Snapchat, everywhere where, Are Baba, what is the reason for that keeping status? Are Baba, simple. You want to show to the public that you are having a brand new BMW car. Correct or not? Correct or not? After purchasing also, assume you want to go to Kerala through that car, or assume you want to go to Karnataka, some hilly areas, or you want to go to Meghalaya, or you want to go to Leh Ladakh through that car. At that time also, you will be keeping one status that I am traveling to Ladakh, I am traveling to Kashmir, I am traveling to Kerala. Like that also you will be keeping status, which means you want to showcase your status to the public not only on the date you have purchased the car, but that time whenever you are making some long rides or something like that also you want to showcase to the public, because obviously people will forget what you are having. So that is the reason you will be showcasing to the public through the preparation of something called as this consolidated financial statements, and these two will be different on the date of acquisition, which means on the day you have purchased the BMW car, your status will be different. You will be keeping the picture where you have taken the key, correct? But subsequent days you will be taking whatever the speed which you have recorded, whatever the views which we will be having from the mirrors and all, you will be taking those. So while preparing the CFS on the date of acquisition, you have to follow Ind AS 103, and while preparing CFS on each reporting period, you have to follow this Ind AS 110. That's it guys. If you have clarity on this, trust me, your understanding will be the next level. You have to understand this Ind AS 103 will be applicable only in the books of parent or holding company, which means indirectly I can say like this: if one person obtained control over another entity, the word control will be playing a significant role here. Okay, after acquiring the control, then only I can say that on the date of acquisition I will be preparing consolidated financial statements. Sir, why I have to prepare consolidated financial statements? In order to showcase to the public that you are having control. Understood? Yes. So after this, there are something called as joint arrangements, wherein you combined with another entity. Okay, if you form as a joint venture, if you and another entity are basically forming as a joint venture, then also you have to prepare two sets of financial statements. One is as per SFS, and one SFS is as per Ind AS 27 and another is as per Ind AS 28, which is nothing but a equity method. Understood? Yes, but if you are following this joint operations, you only have to prepare one set of financial statements, and that is as per Ind AS 111. But trust me guys, these are not that much important from the exam perspective, so I am not touching upon this. Okay, our agenda is this one. Our complete focus is on this part. Clear? This is also somewhat important, but I will be discussing after the end of the standard. This Ind AS 27, trust me Baba, it is only one liner. I will not be touching the standard now. After completion of this Ind AS 103, all relevant topics, then I will be moving on to that topic. Clear? Yes. So yes guys, we have understood the importance of control. So this Ind AS 103 will be applicable only when there is acquisition of the control. So now you have to understand, sir, how actually this control can be obtained. See, one manner you have already know about that. Sir, what is that manner which I have already know about that? It is very simple guys. If you have purchased more than 50% shares of any entity, it is said that you have acquired the control of that entity. Correct or not guys? Yes. So that is obviously one way wherein you will acquire the entity, wherein you will acquire the control of the entity. And there is another way which you have to understand. This may not be known to most of the students, but if you listen to me right now, then you will be easily remembering this part as well. Okay, sir. Sir, what is that first way? This is the first way which is new to you guys. So you want to listen to this first one. It is nothing but option number one, which is nothing but by acquiring the net assets of another company. Sir, what is the meaning of acquiring of net assets of the another company? It is very simple, guys. Here, what will be happening is, see, you have to understand two things. First one, acquirer company, and second one, acquiree company. Sir, what is the meaning of acquirer company? Are Baba, acquirer company is nothing but the company which is purchasing the stake, or the company who is obtaining the control, that will be called as acquirer company. And the company in which you have obtained the control, that will be called as acquiree company, guys. So this acquirer company will be also called as purchasing company, and this acquiree company will be also called as selling company, guys. This you have to understand, which is a very easiest thing which you will easily remember this. Clear? Yes. Sir, what is the first way? It is nothing but by acquiring net assets of another company, which means you will acquire the net assets. Sir, what is the meaning of this net assets? Arey Baba, that is very simple point. Net assets is nothing but total assets minus outside liabilities you have to deduct. Then you will be getting the net assets, which means you will be acquiring the entity, entire company as a whole, which means after acquisition, whatever the entity which you have purchased, that will not exist because you have already taken over the company. After acquisition, that company will not be there, guys. If the company is not there, then I cannot prepare consolidated financial statements. Correct? Because consolidated financial statements itself is nothing but you have to do line to line consolidation, which means assets of the parent company and assets of the subsidiary company will be added. That is the meaning of preparation of consolidated financial statements. And in this option one, after acquisition, there will not be any acquiring company which will be left because you have acquired the entire entity ka net assets, which means after acquisition the company will not be there. So whatever the accounting treatment which you have understood, I mean through this standard, that you have to do in your separate financial statements only. The reason is very simple, guys. There is no company after the acquisition. So what consolidation you will do? That is not possible because there is no company only, first of all. Next, option number two. This is commonly known to all of you students. It is simple that if you want, you can acquire the control if you have purchased more than 50% of equity shares of the company. And Baba, here you have to understand the difference between option number one and option number two. Option number two says, I have just purchased some 60% shares of Geo Limited. Will Geo Limited cease to exist after the acquisition? Are Baba, answer is no. Geo Limited will be having its own assets, Geo Limited will be having its own liabilities, and it will continue even after the acquisition also. And here Baba, here you have to prepare consolidated financial statements, and here you have to apply that line to line consolidation, which means assets of the parent company will be consolidated with the assets of the subsidiary company, and like this you will be applying the line to line consolidation process. So whatever the things which you have studied earlier, which means on the date of acquisition you have to apply this Ind AS 103 while preparing consolidated financial statements. On each reporting period you have to apply this Ind AS 110, and in separate financial statements you have to account for as per Ind AS 27. All these things will be explained. All these things will be explained. These will be actually possible only when you have acquired the control over this option number two. Through option number one, if you obtain the control, consolidation is not possible, Baba, because there is no entity after the acquisition. Clear? This point you have to keep in your mind. Okay, yes, guys. So with this background, you have to understand, sir, how many types of business combinations are basically covered in this standard. Okay, this is also very important thing, guys, because some students may have studied both CA and CMA, and those students can totally correlate with what I am exactly saying right now. If you remember, while studying CA Inter, you will study something about accounting treatment for amalgamation. We have studied one AS there, and that AS will not cover these many acquisitions. Clear? Yes, but our Ind AS 103, which is common for obviously both CMA final also and CA final students also. But this is a very comprehensive standard and it covers all types of possible acquisitions. So I have summarized all the types of business combinations which have happened in this chapter. Okay, so if you observe the first kind of business combination which can happen is this absorption. So what is this absorption? Are Baba, this absorption is also called as takeover, which means assume there is one company which is A Limited, and assume there is another entity which is B Limited. This absorption is nothing but A Limited have absorbed the B Limited, which means whatever the B Limited which is there, that have completely absorbed with A Limited. Clear? Yes, which means B Limited will not continue after acquisition. In simply, I can say that this A Limited have taken over the B Limited. Now, what kind of accounting treatment we have to follow is clear-cutly given in this standard Ind AS 103. 3. Second type of thing is nothing but amalgamation. Sir, what is the meaning of amalgamation? Arey Baba, amalgamation is very simple. Assume this amalgamation can be two types. One type of amalgamation is nothing but, for example, let us assume this A limited and B limited is there. Both have merged together and they have formed a completely new company which is called as AB limited. Correct. This is a classic case of amalgamation, which means if you observe after acquisition, A limited will not be there, B limited also will not be there. Both have put together and they have formed a completely new company which is called as AB limited. This is a kind of amalgamation. And if you observe, there is something called as external reconstruction. There is something called as external reconstruction. Are Baba, this you have to remember, sir. What is the meaning of external reconstruction? Are Baba, this can be happened in even in practical situations as well. Sir, what is the meaning of external reconstruction? Are Baba, one thing you have to understand, sir, what exactly is this reconstruction means? In our syllabus, we also having something called as internal reconstruction also, but I will not touch upon that internal reconstruction. I will be making another video wherein I will be covering all the important problems relating to internal reconstruction there. But this external reconstruction is nothing but, sir, if the company is not going well, if the company is not going well, it is a type of reconstruction through which the company can may perform well. Sir, how this can be achieved? Are Baba, obviously here they may change the management of the company, or if necessary they may change the brand name, or they may change the name of the company and they will run, because most of the things will happen like this. For example, assume there is one company which is having many legal cases upon the name. So now what they will do, since there are many legal cases, obviously the brand name and the goodwill of the company is being affected, but still they want to run the business. So how they can do the business? They can simply form one another company with same assets and liabilities, but now the name itself is different. This kind of amalgamation or business combination will be called as external reconstruction. There are high chances that the same management will control even in the new company also, but with a different brand name, but with a different name and completely different aspects. Clear? This type of reconstruction is called as external reconstruction. Now, whatever the four things which I have been discussing are extremely important from the exam perspective, guys. You can mark these four topics as 5-star category or super important category or most important category, as however you like, because all these four types of business combinations have been recently tested in your examinations. Clear? Simple. So the first one, the most important one according to me, I mean according to your lovable institute, is nothing but, the first one is business combination achieved in stages. This is favorably called as step up acquisition. Here, I will anyways explain them in detail, but for now, if you want to understand, this step up acquisition is nothing but, this is a kind of business acquisition which have made in stages. For example, today I have purchased some 20% of Geo Limited. After 1 week, I have purchased another 20%, which means together I am holding now 40% of the shareholding, but still I cannot get the control. Still, I cannot say that I have acquired the control of Geo Limited. Assume after 1 month I have purchased another 20%. Cumulatively, my shareholding is how much? 20% earlier plus 20% a week after plus 20% a month after. If it total, then it comes to somewhere around 60 percentage, which means now I am having the control over entity. Clear? Yes. The next part, if you observe, the most important thing, students will feel terrified about this reverse acquisition. Arey Baba, but trust me, after explaining, after understanding the video which you have seen in this revisionary, trust me, reverse acquisition will become a cup of cake. It will become a cakewalk for you. What you have to do, just listen the concept of reverse acquisition, because trust me guys, I have explained this concept of reverse acquisition in very detailed manner along with each and every logic which a student have to remember. If you follow the logic, there is no chance that you are going to lose the marks. Clear? Yes. Next, institute's most favorite is nothing but this common control. So what is the meaning of common control? This reverse acquisition I am not explaining now, because I will be explaining in depth during this revisionary series. Clear? The next part is this common control transactions. Sir, what is the meaning of this common control transactions? This is also very important from the practical perspective and also from the exam point of view as well. This common control is nothing but, sir, if the control is with the same persons before and after the acquisition. Sir, I will be taking detailed examples later, but now you have to understand these common control transactions are also very important from the exam perspective. If you look at this word common control, it denotes control is there with the same parties even before and after the business combination. Clear? Now the last part. So till now they are not testing on this concept which is demergers, but I am definitely expecting a question in December 2025 attempt relating to this demergers. See guys, you have to understand one thing. This step up acquisition they have asked n number of times and they are even asking now also, which means this is very important. Reverse acquisitions and common control also they have already asked in your exams, therefore they are also very important. But now whatever the questions which they have not asked till now but which are capable of being asked in your future exams, I am seeing one such most important concept as demergers. Okay, so I will be explaining all these important concepts along with your study material questions. My objective is very simple. If you watch this revisionary video and if you just solve the questions, whatever question which they have given in the exam, you will be able to score a minimum of 22 marks from this business combination chapter. Clear? That is our agenda, guys. Fine. Yes. So with this, now let us start solving this business combination questions. Sir, how to approach this chapter business combination? Sir, are there any steps which we can follow which will give us maximum number of marks? Trust me guys, I have carefully handcrafted 8 steps. Sir, is these 8 steps sufficient? Are these 8 steps sufficient for us to get full marks? Are Baba, more than 200% confidently I can say that whatever the steps which I have explaining right now, those will be more than sufficient for you to get a full marks in your examination. Clear? Yes. Sir, I have categorized into 8 steps, Baba. 8 steps. Okay, so you have to remember these 8 steps. The first step, what you have to do is you have to identify whoever is the acquirer company. Sir, what is the meaning of acquirer company? Are Baba, acquirer company is nothing but purchasing company. Clear? Yes. So obviously, whoever entity is there which is paying the consideration, that will be rated as acquirer company. But however, there is certain exception. That exception is nothing but reverse acquisition, which will be discussed in detail after a short period of time. So the first step you have to identify acquirer company. But one thing you have to remember guys, you have to check the substance over form in identifying this acquirer company. You have to check the substance over the form. The next part you have to identify, you have to determine the date of acquisition. You have to determine the date on which you have acquired the control. This you have to find out. This is step number 2. Very important. You have to find out the date of acquisition. Now the third step, Baba, this is little bit important because from here our practical aspects will be starting. So step number 3, you have to find out the purchase consideration. From here onwards, numbers will start flowing. Okay, so you have to pay 100% attention to understand this concept, which is nothing but step number 3. So how we have to calculate this purchase consideration, I will be explaining in detail and I want 100% of your attention. Okay, so next part, step number 4. So in this step number 4, you will be identifying the net assets taken over by the acquirer company. Arey Baba, one company will be there, it is called as acquirer company. So you have to understand net assets of the acquiree company will be taken over by the acquirer company. So whatever the assets of acquiring company are there, at what values you have to take over, you means acquirer company will be understood in this step number 4. This is also most important step. After that, super important step, step number 5 and step number 6. These two are the, what should I say, these two are the mother steps for this business combination chapter. If you solve this step number 5 and step number 6 correctly, there are high chances that you are going to get full out of full marks. Here guys, yes, you are going to get full out of full marks if you solve this step number 5 and step number 6 correctly. So since these are very important steps, we will be dedicating complete attention. I want your complete attention by listening for, I mean, if by listening to this step number 5 and step number 6. Sir, what is this step number 5? Are Baba, this step number 5 is nothing but you have to calculate something called as NCI. Sir, what is the meaning of this NCI? Are Baba, NCI is nothing but non-controlling interest. You have to calculate something called as non-controlling interest. Sir, what is the meaning of this non-controlling interest? And all I will be explaining in detail while we discuss this step number 5. Okay, sir, fine. After that, the step number 6. Sir, what is this step number 6? Are Baba, that is very simple. Step number 6 is nothing but you have to calculate something called as goodwill or gain on bargain purchase on the date of acquisition. Guys, every calculation you have to do on the date of acquisition. That's why I have said Ind AS 103 will be applicable on the date of acquisition. Understanding or not, guys? Yes. This step number 4 also you have to take on the date of acquisition. Step number 5 also you have to consider the date of acquisition. Even step number 6 also you have to consider the date of acquisition only. So as I have said, this step number 3 super important. Step number 5 and step number 6 are very important. Clear? Yes. So after this, if you observe, the next step is nothing but step number 7. Sir, what is this step number 7? Are Baba, step number 7 is very simple. Step number 7 is nothing but this is the journal entry which you have to prepare by giving the effect of the business combination on the date of acquisition only. Sir, who will prepare this? I mean, who will pass this journal entry? This journal entry will be passed in the books of acquirer company. And the last step is nothing but you have to prepare consolidated balance sheet of acquirer company after business combination. Clear? Simple. Sir, how many steps are there? Totally we are having only 8 steps. Clear? Yes. Sir, can you repeat all the 8 steps? Yes, definitely I will. Okay. Simple, guys. Step number 1, you have to identify acquirer company. Step number 2, you have to find out the date of acquisition. Step number 3, Baba, you have to find out the purchase consideration. Step number 4, you have to find out the value of net assets which will be taken over by the acquirer company. And step number 5, sir, you have to calculate non-controlling interest. Sir, step number 6, you have to calculate goodwill or gain on bargain purchase on the date of acquisition. Step number 7, it is nothing but journal entry giving effect for this business combination. And after that, step number 8, you have to prepare consolidated balance sheet of acquirer after business combination. Are Baba, all calculations you have to do on which date, Babu? On the date of acquisition only, Baba. So which you have to understand this part. Okay, sir, now let us learn all the important steps in detail. Okay, fine. So step number 1 and step number 2 will be directly given in the question. Who is the acquirer company, and obviously what is the date of acquisition, that will be clearly cutly given in the question itself. So that we will not be placing much attention to those. The real deal starts with this step number 3. So what is this step number 3? Step number 3 is nothing but determination of purchase consideration. Sir, what is this purchase consideration? And all I will be explaining. So I want 100% attention, guys. The first one you have to understand. Sir, what is the meaning of this purchase consideration? Guys, you have to understand, sir, this purchase consideration is nothing but the consideration which is paid to the owners of acquiring company. Very carefully you have to understand. whatever the consideration which I have paid to the owners of acquiring company. And next part, sir, what is the purpose of this purchase consideration? Are Baba, whatever the purchase consideration you have paid, obviously the reason is very simple, in order to obtain control of its business. Guys, you have to remember this. Here clearly I am saying whatever the consideration which I have paid to owners of acquiring company, which is indirectly saying whatever the consideration which I have paid to the equity shareholders of acquiring company will be included in the calculation of this purchase consideration. Okay, so what are the things which I can pay as a part of purchase consideration? All the important points which they will be asking in the exam have been summarized nicely here. The first part, in some cases they will directly say that the acquirer company have paid a cash consideration. So cash consideration, whatever the cash you have paid, whatever the cash they have given in the question, you have to take this cash amount while calculating this purchase consideration. Second part, sometimes they will say that they have given the fair value of the asset transferred. Sometimes they may say like this, I, while paying purchase consideration to the owners of the acquiring company, I can pay a car. I can pay a car to the owners of the acquiring company. So in this case, I have to take the fair value of the asset which is being transferred. The third case, Baba, fair value of equity shares issued. In this case, what I will be saying is, Are Baba, owners of acquiring company, I will be issuing equity shares of my own company, meaning I will be issuing equity shares of the acquirer company. So if you are issuing equity shares of the acquirer company, whatever the fair value of such shares are there, that also will be included in the calculation of purchase consideration. And the next part, still shareholders are not satisfied. So what I have decided is I will be giving debentures of my own company, which means acquirer company ka debentures also I will be issuing to equity shareholders of acquiring company, because consideration means amount paid to owners of acquiring company only. Here you have to understand one thing, guys. If these debentures are issued to debenture holders of the acquiring company, will that be forming part of purchase consideration? Are Baba, answer is no, Baba, no, because that must be paid to the equity shareholders of acquiring company. Then only it will be included in purchase consideration. So whatever things you are paying, if you are paying to equity shareholders of acquiring company, all those things will be included in the purchase consideration calculation. And the next part, Baba, present value of deferred consideration. Sir, what is the meaning of this deferred consideration? Are Baba, simple. Deferred consideration means I will be paying you consideration, but not exactly enough. Sir, what is the meaning? Which means I agreed to pay you 1 crore rupees, but not now, after 2 years. After 2 years. So now what I have to record? I cannot record the value which will be paid after 2 years. Are Baba, because time value of the money ka concept is there na. So what I will be doing, I will be calculating present value of such consideration, and I will be including that present value in the calculation of purchase consideration. And the last part is you can take the fair value of the contingent consideration. Sir, what is the meaning of this fair value of contingent consideration? It is very simple. If you observe this word contingent itself, so the meaning of contingent is consideration will be dependent upon some futuristic event. It may happens or it may not happen. For example, if it happens, assume I have said that I will be paying consideration if the profit of the company is let us say some 10 crore rupees, or I can say like this, I will be paying 2 crore consideration if the market price of the share is increases. I mean, if it is more than 100 rupees, then I will pay 2 crore rupees. Like this, I can fix any condition which is futuristic. If something happens or something not happens, if I will be paying you something, that will be called as contingent consideration. And the standard asks you to record this contingent consideration ka fair value also while calculating purchase consideration. Simple, guys. The 6 points you have to understand, and 99.999999% they will ask only out of this 6 points. Okay, fine. The first part, you have to include the cash. You have to include the fair value of the assets transferred. Next, you have to take the fair value of the equity shares, and after that you will be taking the fair value of the debentures which are issued. And after that, if there is any deferred consideration which is given in the question, Arey Baba, what you have to do, you have to calculate deferred consideration ka fair value, sorry, present value you have to take. And if they have given any contingent consideration, Arey Baba, what you have to do in this contingent consideration, you have to record the fair value. You have to record the fair value. Clear? Yes. I have explained some important topics here as well. Sir, what are the important topics? Simple Baba, deferred consideration. What you have to record? Initial recognition you have to do at the present value, and further recognition, or it can be called as a subsequent recognition also. You have to follow. It will be treated as a financial liability and it will be recorded at amortized cost method. Arey Baba, that is very, very simple, which we will be covering in Ind AS 109 very, very detailed. Okay, so our discussion is not that part. Present value of the deferred consideration will be included in the purchase consideration, the calculation. We will be having one very important purchase consideration, which is there in question number 2. Sir, what is this question number 2? Where can I find this question number 2? Arey Baba, in this video, I will be simply attaching the PDF where I have, just a second guys, I have summarized the most important questions according to me. Sir, have you taken these questions, or what is the source of these questions? Arey Baba, the questions ka source is nothing but your institute ka study material. Source is your institute ka study material, and whatever the workbook questions which they have given, new questions, new additional questions which they have given, I have included whatever questions which I felt relevant according to you. So this PDF I will be attaching the link in the video in the description. Okay, fine sir. So here what I did is I have given, after completion of this concept you can directly start with this question number 2. But I am not explaining question number 2 right now, because there are other concepts also which you have to understand if you want to solve this question number 2. But mainly the question is related to this purchase consideration. So I have given the reference number right behind the question. Clear? Fine. Next part. Sir, this contingent consideration. Arey Baba, simple. Here also initial recognition you have to do at the fair value. Sir, what about subsequent recognition? Simple Baba. Here I can say that I can pay in cash based upon some contingent event. For example, if the market price of the share is more than 100 rupees, then I can say that I will be paying 1 crore rupees after 2 years. Like this I can say. In this case, if I agreed to pay in cash, or if I decided to give variable number of equity shares as per Ind AS 109, this will be treated as a financial liability and you have to follow this FVTPL ka accounting. Sir, what is the meaning of this FVTPL? Simple Baba, FVTPL means fair value through P&L account. If you have decided to issue fixed number of equity shares, then remember Baba, that will be treated as an equity instrument. That will be treated as an equity instrument. Fine? Yes. So next part. This is little bit important. Still, our institute is not testing on this point, but I am imagining in the next 2 attempt or 1 attempt, they will definitely cover this point. Arey Baba, as a faculty, I can wait, but you cannot wait. If this point comes in your exam, you have to be well prepared enough. Our objective is pretty simple, guys. Whatever there in the examination, I mean, whatever there in your study material or your sources, you have to cover that completely 100% without any fail. And you have to be a little bit proactive and you have to cover some things which are not there in your syllabus, but still they are capable of being coming in your examination very nearer date, maybe 1 attempt or 2 attempts after. I can wait, but you cannot wait, sir. So what we have to do, some important points I have taken from the CA final ka syllabus as well Baba. So those points may be important, may not, those are might be important because they will be definitely coming in the exam after 2 attempts or 3 attempts. But again I am saying guys, I can wait, but you cannot wait. You have to definitely clear in this attempt. Not clear, clearing is not our objective Baba. Clearing you can easily anyway clear that, but our objective is what? You have to get 22 marks from this business combination only. Correct? Yes. So this point is pretty simple. So I'm not placing much stress in this. since this is not covered in our institute ka things. But this point, definitely I am imagining this point as an adjustment which will be given after one attempt or after two attempts. Okay, fine. So what is this point? Simple. If contingent consideration is payable to employee shareholders of acquiring company. Sir, what exactly is this? Are Baba, assume there is one person who is an employee also plus who is a shareholder also. Sir, what is this purchase consideration? Tell me first. Purchase consideration is nothing but consideration payable to equity shareholders of acquiring company. Sir, what is the purpose? Purpose is simple. Purpose is for the acquisition of the control, which means if something you have paid only for the purpose of acquiring the control, then only you have to include in the purchase consideration calculation. But here, shareholder is also the same person, employee is also the same person, but you have agreed to pay the contingent consideration. So here what you have to check, Baba, you have to check, is there any condition, is there any restriction which will make the employee to continue such employment after acquisition. Sir, I have decided to pay 1 crore to the employee, but the condition which I have said is, Are Baba, you have to continue in the employment after 2 years also. This you have to understand. I have paid the consideration. I said that I will be paying you the contingent consideration. If you observe the substance over form, Baba, you have to understand. Here I am said that I will be paying, but that payment indirectly asking you to remain in employment for the next 2 years, correct or not? Are Baba, which means that amount you are paying not for the purpose of business acquisition, Baba, that amount you are paying in order to continue such person ka employment, which means that will be treated as an employee benefit expense. Na, you are paying such amount to retain that employee, not for the purchase, not for the business acquisition. Therefore, it is very simple, guys. That will not be included in your purchase consideration the calculation. Sir, what is that accounting treatment? Simple. You have to follow Ind AS 19. You have to follow Ind AS 19. That will be treated as an employee benefit expense, because whatever the amount which you have received, that is in the capacity of an employee. Second part, sir, there is no such restriction to continue in employment. Then, Baba, such consideration will be in connection with such acquisition. Therefore, you have to recognize as a purchase consideration in the business combination ka entry. Sir, what is this business combination ka entry? Are Baba, step number 7, if you observe, you will be passing one journal entry. In that journal entry, that will be included in the purchase consideration. Clear? Yes. Simple. If it asks the employees to stay for the future years also, which means you are paying consideration to retain the employees. So that will not be included in purchase consideration. If there is no such condition, then it is for the purpose of acquisition of the business, and therefore I will be including that amount karke. Okay. Fine, Baba, fine. Now, so the next part is acquisition related costs. Arey Baba, this is important point. This will be definitely asked in your examination. Sir, what is this point? Sir, first of all, what is this acquisition related cost? You have to understand one thing. If this mergers or business combinations are taking place, if two companies are basically merging, then these will not be normally undertaken by normal people, because there are many valuations which will be going on. There are many legal advisories which will be going on, and stamp duty also will be included, because many assets will be measured at the fair values. And obviously professional fees, generally big fours will deal with these kind of valuations, because there are many compliances which you have to follow. If you observe the Companies Act also, there are many provisions relating to compromises and arrangements, obviously mergers and amalgamations. You have to get many people's approvals, tribunals approvals, and also there are shareholders agreements also you have to do, and there are number of things which will be discussed in your company law. But our objective is everything will be done with fees, and that fees will be called as professional fees. And professional fee, valuation fee, stamp duty, and legal fee. Sir, what is the accounting treatment for this? Sir, will this also be included in the purchase consideration calculation is our question. Simply remember one logic. these costs will not be paid to the shareholders of acquiring company. This legal fee will be paid to the lawyers. This stamp duty will be paid to the stamp duty department. This valuation fee will be paid to the persons who have did the valuation. This professional fee will be paid to the CAs or CMAs. So, since these are not paid to the owners of acquiring company, this will not be included in purchase consideration calculation. So, what is the accounting treatment for this? Simple, Baba. That will be recorded as an expense in P&L account. That will not be considered as a part of purchase consideration. This point you have to understand, guys. Clear? Yes. Now the next part. Okay. Yes, guys. So now the next step. So step number 4, you have to identify the net assets of acquiring company which are taken over by the acquirer company. So here you have to understand one thing, guys. All assets and liabilities are taken over at fair values. At which values you have to take over, guys? You have to take over all the values at all the assets and liabilities at fair value, and that fair value also you have to find on the date of acquisition only. This is the first point. Second point, most important, one of the most important second point you have to understand. If there is any intangible asset, if this is not required in acquirees books, but still if that meet the recognition criteria as per Ind AS 38, you have to record that at fair value. You have to record that at fair value in the books of acquirer. Clear? Yes. So whatever the intangible asset which is there, whatever the intangible asset which is there, that is not, that cannot be recorded because it do not met the recognition criteria in acquirees books. But still, if it met the recognition criteria in the books of acquirer, then that should be taken over at the fair value. That should be taken over at the fair value. Okay, sir, can you give us an example? Yes, guys. Assume acquiry book. In acquiry books, there is one asset which is called as internally generated customer relationships or patents or any non-compete fees. If these are self-generated, there are high chances that this will not be measured in the books. I mean, that cannot be brought into the books of the acquiry, but still you are acquiring. So as the purpose of acquisition, if you are purchasing these assets, Are Baba, these are not actual assets which have met the recognition criteria in acquiry books, but still these are having the capability in order to meet the recognition criteria category in the books of acquirer books. So now you have to record this. Now you have to record even this intangible also at which value, Baba? You have to record this value also at the fair value. That is not meeting the recognition criteria in the acquirer books, in the acquiry books, but still in acquiry books, if that is recognized, you have to recognize the same at which value, Baba? Fair value. Okay. Yes, sir. Next part. Just a minute, guys. Just give me a moment. So next part. Sir, if there is any contingent liability of the acquiry company, that will also be taken over and recognized as a liability at fair value on the date of acquisition. Sir, generally you know that contingent liability will not be disclosed as a liability in the books of financial statements basically. Rather, that will be disclosed as a notes to accounts. Correct or not? Yes. But still, if you have acquired any entity which is having a contingent liability, one thing you have to understand, while deciding purchase consideration, I will also consider that contingent liability also. Correct or not? Yes. So whatever the contingent liability which is there, you have to take over that contingent liability and you have to record that contingent liability as a liability in the books of acquirer. At which value? Obviously at fair value on the date of acquisition. Clear? That may be a contingent liability in the books of acquiry, but still through the process of this takeover, you have to record that contingent liability of the acquiry company also as a liability only. There is one question in this. If you open this question number 4, you will understand what I am trying to say. What they will say is Z Limited acquired C Limited. In this case, if you observe, Z Limited is called as acquirer and C Limited will be called as acquiree. For a lawsuit contingency, C Limited has a present obligation on 1st April and the fair value is how much, Baba? 50,000 rupees. Correct? Yes. As on the acquisition, it is not believed that an outflow of cash or other assets will be required to settle this matter, which means they are staying still there is no present obligation. So that will not be recorded as a liability. But still, since it is a contingent liability of the acquiring company, you have to record even this contingent liability. Are Baba, but still that is clearly saying that an outflow of cash or other assets will not be required. But still, Baba, since that is a contingent liability of the acquiring company, while discussing the purchase consideration, you will be definitely giving the effect of this. So what they will be saying is this will be recorded as an liability at a fair value. Sir, but this is not acceptable by Ind AS 37. Answer is correct. It is not acceptable as a Ind AS 37. But still, you have to follow Ind AS 103 only. Here in the answer, they have clearly explained contingent liability are recognized as of the acquisition date if there is a present obligation. Even if it is not probable that an outflow of resources is given, because this is one of the conditions that an outflow of cash or any other resources is a must to recognize a liability. Okay, but here they are clearly saying that there is no outflow of cash, but still you have to apply the provisions of Ind AS 103 and whatever the fair value of the obligation which they have given, that will be recorded in the books of the acquirer, which is Z Limited. They will be recording this 50,000 rupees as a liability. At which value they will be recording, Baba? They will be recording at fair value. Clear? Yes. The next part. Yes. Now the next part which we will be taking over is this indemnification asset which is promised by the acquiring company is also taken over. Guys, this have little bit interlink with the contingent liability which we have discussed earlier. Sir, what is the interlink between this indemnification asset and the contingent liability? Guys, what I have said about this contingent liability, Are Baba, it is dependent upon some futuristic event. For example, assume there is any lawsuit filed by the customer on the acquiring company. For example, the amount for which, for example, if the acquiring company have lost the case, then acquiring company have to pay, for example, assume it should pay some 10 crore rupees as penalty to that customer. Clear? Yes, that is nothing but contingent liability, because whether the acquiring company will be paying that or not will be decided upon the judgment of the court. Still the judgment of the court has not happened. Therefore, you have to understand that is contingent as on the date of acquisition. Okay, what you have understood is you will be taking over that contingent liability also at the fair value on the date of acquisition. Okay, that we have understood. Now what they are saying, if there is any indemnification asset which is promised by the acquiring company, here what have happened is acquirer company is there, correct? Acquirer company have gone to acquiring company and they are requesting the acquiring company, Are Baba, currently we are acquiring you. For example, assume we have lost the case, then who have to pay the penalty amount to the customer? Obviously acquirer company have to pay the penalty amount, because after acquisition there may not be the existence of acquiring company. So what they are understanding, what they are discussing is they went to the acquiring company and they have discussed with the acquiring company that, Are Baba, I will be paying this contingent liability if in case we lost the case. So I want some protection from you, which means you have to promise me some amount. You have to promise me some amount, so that that means if the acquiring company have lost the case, you have to reimburse me some amount. That is nothing but indemnification asset. Here acquiring company is saying, Are Baba, acquirer company, don't worry about the contingent liability. Even if we lost the case, then you have to pay the penalty amount to the customer. Okay, that is fine. We will be reimbursing you some amount of such contingent liability. For example, if the contingent liability is 10 crore rupees, I will promise up to 5 crore rupees I will be paying. I mane acquiring company will be paying to the acquirer company. Guys, understood or not? Very simple. Acquiring company will be saying, okay, I can reimburse you maximum 5 crore rupees. If it is more than 5 crore, arey baba, I cannot reimburse. But up to 5 crore, how much amount will be there? I will be reimbursing that. I will be indemnifying the loss which will be suffered by the acquirer company. So what they are saying, obviously this will become indemnification asset. Of course, it is also against the recognition criteria, because you have to recognize the losses immediately and you have to postpone the recognition of the gains. But still, this is against that recognition principle. And here what you have to understand is this: whatever the indemnification asset which is there, which was promised by the acquiring company, will also be taken over at the fair value only. But maximum it cannot exceed the contingent liability which you have taken over, and that is very common sense. For example, the contingent liability itself is 10 crore. Will the acquiring company indemnify for 12 crores or 15 crores or something more than the more than the contingent liability? Arey baba, answer is no. Obviously they will reimburse less than the contingent liability. So this is the point which they are explaining here also. What they are saying is maximum amount which you can recognize as indemnification asset is nothing but the amount of the contingent liability which is taken over. Understood? Simple point. If you check the next point, what they are saying is reacquired rights. What is this reacquired right? Sir, what is the meaning of this reacquired right? I will be taking one example so that you will be easily understand this point. Reacquired rights, if it is because of the pre-existing relationship in the books of acquiring company. Sir, what is the meaning of this pre-existing relationship? Arey baba, first you have to understand. I will be taking one example. Okay, assume there is one contractual relationship which has happened before the acquisition. Okay, yes, I think you all know about this TEJA, which is a very popular franchise which will be selling these franchises all over the India. For example, there is one person who is Mr. Naeem Bhai and Co. He is acquiring. TEJA is the acquirer. What have happened is this have happened before the acquisition, guys. See, if you check the dates on 1st April 2021, what have happened is this TEJA have sold the license for 2,50,000 rupees for a period of 10 years. What is the date, guys? 1st April 2021. Clear? Yes. This point you can ignore for the time being. Okay, this is not relevant for us. So what I will be doing is I will be removing that part. Okay, here what you have to understand is after 4 years, which means on 1/4/2021 plus 4 years, which means what? 1st April 2025. Okay, sir, what happened in this 1st April 2025? Arey baba, original license is granted for how much period, baba? 10 years. Sir, how many years are completed as of now? 4 years have been completed, which means whatever is the balance period which is left, 6 years. Correct or not? Yes. This Mr. Naeem Bhai and Co. is having the license of the TEJA franchise for how many years, baba? 6 balance years. Because original contract is for 10 years. And how many years have completed, guys? 4 years have been completed, which means what is the balance period? 6 years. Okay. Now Mr. Naeem Bhai and Co. is having the right to, the franchisee of this TEJA for a period of 6 years. But now what have happened? After 4 years, TEJA have acquired Mr. Naeem Bhai and Co. Clear? Now you have to understand. Mr. Naeem Bhai and Co. is being acquired by the TEJA. If you observe, this TEJA is now having reacquired right. Reacquired right. The reason being, after acquisition of Naeem Bhai and Co., whatever the earlier license which this TEJA have sold to Mr. Naeem Bhai and Co. has again come back with the TEJA. If it wants, it can sell the property, it can sell the franchisee rights for any person for the balance period, which is nothing but 6 years. Correct or not? If you observe, now in the books of acquirer, which is TEJA, it had become an asset, because if it wants, it can obviously give to any other person. Correct or not? So that also will be recorded as an asset in the books of TEJA. That is nothing but which they will be explaining in the part. What they will be saying is, Are Baba, whatever the reacquired right which is there, that will also be taken over and recognized at fair value on the date of acquisition. Clear? Yes. Next part, Baba. Sir, if there is any non-current assets which are held for sale of a acquiree company, okay, acquiree company ka non-current assets are there, but the thing is those are already held for sale. Now what you have to do, you have to recognize it FVLCTD. Sir, what is the meaning of this FVLCTD? Arey Baba, it is nothing but fair value less cost to dispose as per Ind AS 105. Clear? Yes. So now the last part. You have to recognize deferred tax asset or deferred tax liability due to the net assets taken over of the acquiree company. Sir, why this deferred tax asset or deferred tax liability will be coming? You have to understand. Guys, you have to understand. Acquirer company will record all the assets and liabilities of acquiree company at what values, Baba? At fair values. But acquiree company may choose to record all the assets and liabilities at their carrying amounts only, which means if you observe, there will be definitely some portion of difference between the carrying amount in acquiree books and the fair value in acquirer books. Correct? Because of this difference, because of this temporary difference, there may be a chance that either DTA or DTL will be created. Sir, whatever the fair value which you have taken, that will become carrying amount as per the books, and whatever the carrying amount in acquiree books is there, that will become your tax base. So whatever the fair value of the assets, if it is more than the carrying amount, then you have to create a deferred tax liability, and reverse vice versa, you have to create the deferred tax ka asset. Clear? Yes. The crux of this point is basically you have to take over all the net assets of acquiree company at what values, Baba? Fair values, and you have to do line by line consolidation. Again, I am repeating, guys, assets and liabilities of the subsidiary company will be combined with assets and liabilities of the parent company. That is the meaning of line to line consolidation. Clear? Yes. Now the next part, guys, another super important working note. This is the crux of the business combination chapter according to me. You only have to solve 3 very important working notes in order to get this business combination ka question perfectly. The first working note, guys, step number 3, which is nothing but a determination of the purchase consideration. After that, you have to be very careful while calculating this step number 5, because this step number 5 also involves numbers. After that, the very next step which you have to check is this step number 6, which is nothing but a calculation of the goodwill or gain on bargain purchase on the date of acquisition. Clear? So now let us quickly check this step number 5, which is nothing but a calculation of NCI. Fine, sir. What is the meaning of this NCI? NCI is nothing but non-controlling interest. Clear? Yes. Sir, what is the meaning of this non-controlling interest, sir? If you understand, you will easily remember this part. Clear? Yes. It represents the ownership which is owned by other than parent entity. Sir, what is the meaning of ownership other than by parent entity? Guys, for example, there is one entity which is A Limited and there is another entity which is B Limited. A Limited have acquired 70% shares of B Limited, which means A Limited have become the parent company. Correct or not? So the share of ownership by the parent company in B Limited is how much? 70%. Sir, what about other 30%? 30% represents the ownership which is owned by other than parent company. Correct or not? Yes. So that 30% represents the ownership other than by parent entity, and therefore that will be called as non-controlling interest. That will be called as non-controlling interest. Clear, guys? That is the thing which you have to understand. Okay, sir. Next part. Always remember step number 3, determination of purchase consideration. Step number 5, calculation of NCI. Step number 6, calculation of goodwill or gain on bargain purchase. All these calculations should be calculated on the date of acquisition only, because after all this business combination ka accounting itself will be done on which date, guys? On the date of acquisition itself. Therefore all the calculations you have to perform only on the date of acquisition. Clear? Yes. Okay, sir, fine. We have understood that we have to perform the calculation of NCI on the date of acquisition only. Clear, sir. Next, you have to understand, guys, there are different methods which are given in the standard to calculate this NCI. Clear? Yes. The first method, if you check, it is nothing but a fair value method. It is nothing but fair value method. Sir, what is the meaning of this fair value method? Guys, always give the preference to the question directly. Always you have to give the first preference to the question. If the question is saying 2 plus 2 equals to 5, still Baba, don't apply common sense. You have to give the preference to the first preference to the question only directly. Okay, sir, fine. We have understood that we have to give the first preference to the question only. For example, if the question have directly said that fair value of the NCI is 1 lakh rupees, I will not be applying my brain. I will directly take the fair value of that NCI as 1 lakh rupees. Otherwise, second preference you have to check in that question whether they have given any fair value per share of acquiring company. That you have to take, and that should be multiplied by the number of shares held by NCI. For this, they will be giving some sort of information in the question. So second preference you have to give whether they have given fair value per share of acquiring company or not in the question. If they have given, you have to take that figure, and that should be multiplied with the number of shares which are held by NCI in acquiring company. That is the first method which you have to follow. First method, fair value method. Second method, what you have to calculate is, it is also very important method, guys. So what you have to calculate, this second method is nothing but proportionate share in net assets method. What is this method, sir? Proportionate share in net assets method. If you understand this wording itself, you will understand what I am trying to say. You have to calculate identifiable net assets. Sir, what is the meaning of identifiable net assets? Arey Baba, that is nothing but the value which you have calculated in step number 4. Correct or not? So whatever the step number 4 which you have calculated, that net assets you have to take. And NCI Baba, NCI people are saying, arey, in this net assets, obviously I am also owner na, which means I am also having share in this net assets na. Like that NCI people will argue. Therefore what I will be doing, take the net assets ka figure and just give their share to them. That's it. That represents the NCI ka value. That's it. Sir, we are understanding, but we want examples to understand this perfectly. Therefore, I have taken n number of questions. Just be little bit patient. After completion of this step number 6, we will be immediately solving with the questions. Clear, guys? Yes. The next part. So, what you have to take? You have to take the net assets as per step number 4, and that should be multiplied with the NCI ka stake in acquiring company. Clear? That's it. You will be getting NCI ka calculation. To summarize, in order to calculate NCI, you will be having two methods. First method, fair value. First preference, check the question. Whatever they have given, you have to take that. Second preference, check whether the question have given any detail with respect to fair value per share of accounting acquiree. If they have given, kindly take that value and just multiply with number of shares of accounting acquiree which are held by NCI. Then also you will be getting the NCI ka value. If that is also not possible, please go for proportionate share in net assets method. Sir, how I will be getting that proportionate share in net assets method? Arey Baba, you have already calculated identifiable net assets in step number 4. Take those directly. Please multiply that with NCI का share in acquiry company, then you will be getting directly the NCI का value. Clear? Yes. Next, what you have to understand is whatever the NCI which you have calculated, that will be shown as a separate line item in equity head of the balance sheet. While solving questions, I will be practically showing this part, but what you have to remember is while consolidating the share capital also, equity and liabilities head you will be writing. In that equity share capital you will write, reserves and surplus you will write. After that you will be showing this NCI ka portion. Clear guys? Yes. Sir, we have completed 5 steps. Now another most important step. Step number 6. Sir, how to calculate this step number 6? Simple Baba. This step number 6 is nothing but you have to calculate either goodwill or gain on bargain purchase on the date of acquisition. Okay sir, I have understood. First you have to take the purchase consideration as per step number 3. For that you have to add NCI as per step number 5. You have to add these two figures, and from these two figures you have to directly deduct the identifiable net assets which you have taken over of the acquiring company. Then you will be getting goodwill or gain on bargain purchase. If the number is positive, you will be getting goodwill. If the number is negative, you will be getting gain on bargain purchase. Sir, why we are adding this NCI and all? Can you please give us some logic? Definitely guys. For example, assume there is one company which I have acquired some 70% of stake. Whatever the purchase consideration which I have paid, that is obviously for the 70% of the stake only. Correct or not? But here whatever the net assets which I have taken, that represents 100% of the net assets. Correct? Which means some portion of those net assets is there which are not belonging to me. So what I did, I have to include that portion also, and this will be compared with the 100% of net assets, and I will be calculating either I got the goodwill or whether I got the gain on bargain purchase. I will be calculating that separately because these net assets will be for 100%, but purchase consideration will be only for the stake which you have purchased. But ultimately there will be a little bit mismatch. So what you have to do is you will be calculating NCI ka value also there. Understood guys? Yes sir, we have understood. We are waiting to solve the problems. Don't worry Baba, I am also even waiting to solve the problems. Clear? Next part. Goodwill cannot be amortized like other intangibles, but it can be tested for the impairment annually. This is little bit interlinked with the Ind AS 36, which is impairment. Clear guys? Yes, goodwill cannot be amortized like other intangibles, but it can be tested for the impairment. Another thing you have to remember guys, if NCI is calculated using fair value method, whatever the goodwill which you will be getting, that is called as full goodwill. That is called as full goodwill Baba. That goodwill will also be shared with the parent company also and NCI company also, because you have calculated NCI using fair value method. Sir, how to remember this? Simple. Fair value, full goodwill. F. Next part. Sir, if NCI is calculated using Pasina method, which means proportionate share in net assets method, whatever the goodwill which you are getting, that is nothing but a partial goodwill. Sir, how to remember? Simple. Pasina, partial. P. Fair value, full goodwill. Fair value, full goodwill. F. Pasina, partial. P. That's it guys. That's it. Okay, fine. Sir, we have completed this step number 6 also. Okay guys, we will be completing this step number 7 also, and then we will be solving the questions relating to this part. Sir, okay sir, fine. Now you have to pass the journal entry for the business combination on date of acquisition by the acquirer company. Sir, first let us understand what will be the entry which will be passed in the separate financial statements. Correct or not? Yes. Sir, it is nothing but you have made some investment in the subsidiary. Arey Baba, correct or not? Yes sir, I have made some investment in the subsidiary. So what I will be doing is I will be debiting investment in subsidiary account. Arey Baba, that is my investment, so obviously I will be debiting that na. And credit I will write. If I have paid cash, I will be crediting the cash. If I have given equity shares of mine, I will be crediting equity share capital. If I have given debentures to the company ka shareholders, I will be crediting the debentures. Arey Baba, if I have given the deferred consideration, then I will be crediting the provision for deferred consideration. And if I have decided to give the contingent consideration, I will be crediting to provision for contingent consideration. But this is nothing but the journal entry which I will be passing in my separate financial statements. Clear? Yes, you will be debiting the investment in subsidiary, and whatever the credit which you have to write, that is nothing but how I have discharged my purchase consideration. Sir, another important thing which you have to remember is the journal entry which you will be passing in your consolidated financial statements. Arey Baba, that is even more easier. Okay sir, how I have to pass that? Guys, listen, whatever the investment in subsidiary which you have in your separate financial statements, first you have to cancel that investment in subsidiary. Sir, why I have to cancel my investment in subsidiary? Arey Baba, simple reason why you are preparing consolidated financial statements, because you want to show your status to the public. So what you are doing is, you will not be showing this investment in subsidiary. Rather, you will be directly bringing the assets and liabilities of the acquiring company, which means whatever the assets of acquiring company are there, now all those assets will be added to your books. So assets will be debited. Whatever the liabilities are there of that acquiring company, that will be added to your books. Therefore, liabilities will be credited. And whatever the investment which you have made, that should be cancelled, correct or not? Earlier investment is having debit balance. In order to cancel that, I will be crediting the investment in subsidiary also. And another thing you have calculated, NCI also you have to deduct na. Arey Baba, because step number 6 I have explained the logic. This purchase consideration is only for some part, so the balance amount should be consisting of this NCI. And whatever the difference which you are getting, if the difference is on debit side, you will be getting goodwill. If the difference is on credit side, guys, you will be getting gain on bargain purchase. Guys, trust me, this is the only entry which you have to pass in consolidated financial statements. Trust me guys, this is the only entry which you have to pass. Sir, how to remember this? Arey Baba, completely logical. You have to bring all the assets of the acquiring company in your books, therefore assets will be debited. You have to bring all the liabilities of the acquiring company in your books, liabilities will be credited. Whatever the investment in subsidiary which you have in your separate financial statements has to be cancelled na. Investment in subsidiary will be having debit balance, now that should be credited. NCI ka value also should be credited. Sir, whatever the difference which is there, if that difference will be coming on debit side, that is goodwill. If that difference is coming on credit side, that is nothing but a gain on bargain purchase. Guys, whatever the goodwill or gain on bargain purchase which you will be getting here, that will be exactly same as that of step number 6 ka goodwill or gain on bargain purchase. That's it guys, we have completed the most important 7 steps. Now we will be solving enough number of problems in order to understand the concept. Clear? Yes. Clear guys? Yes. So yes guys, now let us check this question. Question number 2 of the PDF which I will be sharing. So quickly check this question guys. On June 2021, AK Limited have acquired 65% share in BK Limited. One second guys. Okay, this AK Limited have acquired how much percentage guys? 65% share in BK Limited. Sir, in this case, this AK Limited is nothing but a acquirer entity, whereas this BK Limited is nothing but a acquiree company. Clear? Yes, BK Limited is having 1,05,000 equity shares and the quoted market price of its share is how much guys? 14 rupees per share. which means they are indirectly saying the fair value per share of the BK Limited they have given is how much, Baba? 14 rupees. Next they are saying the fair value of BK Limited's identifiable net assets is how much? 90 lakh, which means they have calculated and given you step number 4. Clear or not? Yes. As part of purchase consideration, they are clearly explaining this purchase consideration ka part. If you check first one, they are saying they have paid 52 lakh rupees in cash. So what we will be doing, guys, this will be included in the calculation of purchase consideration. Here what I will be doing is I will be writing all the amounts which will be included in the purchase consideration. Next one, what have happened, guys? They have issued 55,000 equity shares whose market value is how much, Baba? 27 rupees, which means in purchase consideration ka calculation, if you have given equity shares of acquirer entity, then what you will do, Baba? 55,000 multiplied by 27 rupees. That will also be forming part of your purchase consideration. Yes, guys. Next one. And they have also agreed to an additional consideration of how much? 15 lakh rupees payable if BK Limited ka cumulative profit for the next 3 years exceeds 1 crore 15 lakh. Guys, this is nothing but contingent consideration. Sir, what we have to do with this contingent consideration? Arey Baba, simply you have to check for fair value whether they have given the fair value or not. If you check, they have given the fair value as 10,80,000, which means this amount also will be included in the calculation of purchase consideration. Clear? Yes, this amount is nothing but 14,85,000 rupees. If I add all these three figures, I will be getting something. Another thing, guys, they have given acquisition related cost. This also we have already understood. This acquisition related cost will be expense to P&L account, which means this will not be forming part of the purchase consideration. Sir, what is the question is asking? NCI is measured at fair value. NCI is measured at what, guys? Fair value. You have to understand how will AK Limited account for the acquisition of BK Limited under Ind AS 103. Simple, guys. First, you go ahead and calculate the purchase consideration. You have to include these three amounts, and your purchase consideration is how much, Baba? 77,65,000 is nothing but the purchase consideration of you. Clear? Next one, what you have to do, Baba? See, you have got this purchase consideration ka value. Now you have to calculate the NCI ka value. Sir, how I will be getting NCI value? Simple. How many shares are there in BK Limited? They have given 1,05,000 shares are there in BK Limited. So what I will be doing is 1,05,000 into 65% or purchased by AK Limited, which means NCI value is how much? 35% multiplied by, I will be checking for the first preference whether they have given the fair value of the question, fair value of the share directly. Answer is no, but they have given the hint fair value of BK Limited. Sorry, this one quoted market price of its share is 14 rupees per share. So what I will be doing, I will be multiplying this, and this will be my NCI ka value. If you check my NCI ka value, 1,05,000 into 35% into 14 rupees, this will become my NCI. Now I will be getting some total which is 82,79,500. From this, I have to deduct something called as net assets acquired on the date of acquisition, and the balancing figure which I will be getting is nothing but a capital reserve. I mean, that is gain on bargain purchase. That will be treated as what, guys? GBP, gain on bargain purchase. That can be also called as capital reserve. Clear, guys? Yes. Next, what they have asked is you have to pass the necessary journal entry also. Simple journal entry, guys. You have to bring the net assets of the entity. So I have debited the net assets of the company. Next one, guys, what you have given. See, you can directly credit the investment in subsidiary account also, or if you want, you can pass the net entry also like this. See, if you ask me, sir, what exactly you are trying to say? See, instead of this investment in subsidiary here, and instead of investment in subsidiary here, what I will be doing is I will be eliminating this one and I will be eliminating this one. Which one? Rather, I will credit all these points here. Okay, the same thing they have did. If you want, you can pass like this as how I have explained, which means first I will be passing investment in subsidiary account data to all these items. Okay, then what will be having equity share capital. I have to credit this at face value only, but I have issued price is how much, guys? 17 rupees. So these two will be credited, and cash also will be credited. Provision for contingent consideration also will be credited. NCI ka value also will be credited, guys. And the last important, you have to credit this gain on bargain purchase also, which is also called as capital reserve. Other than this, you may write this gain on bargain purchase also. Note they have explained acquisition related costs will be expensed in the period in which such cost is incurred, and they are not included as part of the consideration transferred. Therefore, that will be incurred will be ignored by AK Limited for the purpose of calculation of the purchase consideration. That's it, guys. Very simple question. Fine. Yes. Okay. So next example, guys, regarding this contingent consideration, which is question number 3. If you check this, that is very simple. The question will be saying D Limited have acquired 100% of the equity of F Limited, which means who is the acquirer, guys? Obviously D Limited is the acquirer. The purchase consideration comprises of an immediate payment of how much? 10 lakh rupees, which means now you have to pay immediately 10 lakhs and 2 further payments of 1.21 lakhs if the return on equity exceeds 20% in each of the 2 subsequent financial years. What they have given, a discount rate of 10% is given, and you have to calculate the value of the total consideration on the acquisition date. Guys, here you have to apply one thing. Whatever the consideration which they have given is nothing but contingent consideration, which means that will be usually recorded at fair value. But question do not given fair value, but they have given something called as this discount rate. Sir, so what we have to do? Simple, Baba. What we have to do is you have to calculate. Okay, you have to calculate the present value of this consideration. You have to calculate the present value of this consideration, and you have to include that value in the purchase consideration calculation. That's it, guys. Yes, just a minute. Okay, so simple, guys. For this contingent consideration also, generally what we have calculated here is we have calculated the fair value. We have calculated the present value, but since the question has no information, I will be taking this value as a fair value, and my purchase consideration will be 12.1 lakhs. That's it, guys. Simple question. Okay, next question, if you check this, already we have completed this question number 4, which is regarding the contingent liability, and if you check the next part, which is nothing but a goodwill calculation. Okay, fine. This is a little bit important, so let's quickly try to understand this part. A Limited acquires 80% of shares of B Limited for 12,80,000 rupees, which means indirectly the question is asking you to understand NCI share is how much? 20%. Clear? Yes. They have also given fair value of B Limited's net assets at the time of acquisition is how much? 14,80,000 rupees. How much? 14,80,000 rupees is nothing but INA. That means identifiable net assets ka value. What the question is asking you to calculate? It is simply asking you to calculate the goodwill. Clear? Sir, what is the purchase consideration which they have given, sir? 12,80,000 is the purchase consideration which I have to take. Plus, what should I add? NCI ka value I have to add. Sir, is there any information about NCI? I mean, any information about the fair value which I can take? Answer is no, Baba, no. There is no information for you. Which means, sir, here what I can be doing? Arey Baba, here you have different values. First, there is one option to calculate the fair value. Here also they have given non-controlling interest should be recognized at a fair value. Sir, how can I calculate the fair value? Simple, guys. Here this 12,80,000 rupees is for purchasing 80%. But now you have to calculate the NCI ka value only 20%, which means if I calculate like this, I will be directly getting the NCI ka value. Which means, sir, what is the NCI ka value? NCI value is nothing but 3,20,000 rupees. So NCI value I will be adding 3,20,000 rupees. Okay, I will be getting one figure. From that I will be deducting this identifiable net assets, which is nothing but 14,80,000 rupees. That's it. Okay, so the value is how much? 12,80,000 plus 3,20,000 minus 14,80,000. If I did, I will be getting 1,20,000 rupees positive amount. Therefore, it is treated as goodwill. It is treated as goodwill, guys. Clear? Yes sir. Journal entry what I will be passing. In individual set of accounts, let us check. Okay, first one, this credit should come here. This is a little bit mistake guys, this credit also should come here. Fine. Yes, individual set of accounts, what you will be passing is you will be debiting investment in B Limited to consideration account. How much? 12,80,000 rupees. Here in consolidated financial statements, what you will be doing, first you will be bringing back the net assets into your books, so net assets will be debited. Correct or not? Here you should not write to consideration. Technically speaking, you have to write here investment in B Limited, because already we are having debit balance in your book, so now you have to cancel that, so you have to write investment in B Limited credit side. Sir, where the, also you have to credit the NCI ka value also. So the difference is coming in debit side, therefore it will be called as goodwill. It will be called as goodwill guys. Trust me, this was this much simple. Nothing we are doing. We are just playing with the figures. We are just playing with the working notes which we have recently learnt. Correct? The sixth question I will be coming a little bit later. Next, if you check this part guys. Okay, question number 7. So yes guys, now the 7th question. They will say that Z Limited have acquired 60% interest in P Limited. Okay, fine. Z Limited is having 60% holding, which means indirectly you have to understand one thing guys. NCI is holding how much sir? 40%. Clear? Yes. Z have paid 960 lakh rupees. Sir, they have paid some 960 lakh rupees in cash. The question is saying the fair value of the P Limited's assets is 2400 lakh and the fair value of its liabilities is 900 lakhs. You already know that you have to take identifiable net assets. Sir, how I will be getting this? You have to take the total assets and you have to deduct the total liabilities, which means 2400 minus 900 you have to do, which means I will be getting 1500 lakhs. This is nothing but your identifiable net assets. They are asking you to pass only the journal entry for the acquisition using Ind AS, assuming that Z Limited do not wish to report the NCI value at fair value. They are clearly saying NCI valuation will be done but not at fair value, which means they are indirectly asking you to calculate NCI at Pasina method. Sir, how much is my net identifiable assets? It is 1500 into 40% is nothing but your NCI ka value guys. So if you check this, 40% into 1500 lakhs, which is nothing but 600 lakhs is nothing but NCI ka value. But our purchase consideration is how much sir? 960 lakhs plus NCI value I have to add how much sir? It is 600, which means 1560 minus I have to take identifiable net assets ka value, and this is nothing but 60 lakh rupees. This 60 lakh is nothing but goodwill. Since it is positive figure, you will be getting the goodwill. What the entry they have asked? Show the acquisition journal entry they have asked. So I will be passing journal entry in both separate financial statements also and also the consolidated financial statements also. Sir, consolidated financial statements let us think later, but first let us understand how in separate financial statements this entry will be recorded. Simple guys, investment in subsidiary account added to a cash. So this is fine. You can write anything. They have written consideration account added to cash account. Okay, but while consolidated financial statements, what you will be doing, you will be bringing the assets. How much? 2400, and you will be crediting the liabilities 900. Consideration also will be credited 960 rupees and NCI also will be credited, which is 600. Sir, whatever is the balance which is there, that is nothing but the goodwill, and which will be written directly as a balancing figure. Trust me guys, this is this much easier. Okay, another question also let us check. On 1st January 2021, M Limited acquires 80% of the equity interest of the P Limited by issue of equity shares whose market value is 240 lakh rupees, and they are saying identifiable assets are measured at 380 lakhs and liabilities are measured at 60 lakh. See, here indirectly you have to understand, sir, 20% is nothing but NCI. They are saying NCI is measured at proportionate net asset value. Sir, what is the value of the net assets, sir? Simple baba. Assets how much? 380. Liabilities how much? 60 lakh. Which means net assets ka value is how much, sir? 380 minus 60, which is nothing but 320 lakhs. Out of this, 20% belongs to NCI, which means NCI ka value is 64 rupees. Sir, how much consideration I have paid? What they are saying is you have issued the shares of M Limited, whose market value is how much? 240 lakhs. So how I have to calculate this, sir? 240 plus 64 you have to take. From this you have to deduct net assets, which is 320 rupees. Obviously you will be getting negative amount, and that negative amount is nothing but gain on bargain purchase. That's it, guys. Once again I am saying, all these are very easily you can solve them if you know exactly how to approach these kind of things. That's it, guys. So simple. You have to pass the net assets, liabilities also you have to take down, next consideration also you have to take down, guys, and NCI also you have to take, sir. Whatever the balancing figure which is there, that will be treated as gain on bargain purchase. That's it, guys. This much easier. Correct? Yes. So yes, guys. Now the next question, which is question number 9. Let's quickly check into this question number 9. This is very simple, guys. Sir, what they are saying is they have given this C Limited acquires 60% share in D Limited, which is clearly saying that this C Limited is nothing but acquirer entity, and this D Limited is acquiree entity. And if you check, 60% is the holding of C Limited, which means obviously indirectly you have to understand NCI value is nothing but 40%. Clear, sir? Yes. Sir, they have already given the fair value of non-controlling interest is 1 lakh rupees. If you check, they have directly given the fair value of the non-controlling interest. Guys, I have already explained. First importance, you have to always give the question. So here what we will be doing, whatever the fair value whichever is given in the question, that we will be taking directly. Sir, here what is the value which they have given? Guys, they have given this 1 lakh rupees. Next one saying, they are saying, sir, how this 1 lakh is calculated? They are saying, frankly speaking, that information is not relevant for us, but let us just read for the purpose of which they have given. This amount was determined with reference to the market price of these ordinary shares before the acquisition date. What they are saying is they have calculated the fair value based on the market price of these shares. Oh, that's it. That is normal thing only. But what you have to take is NCI fair value is how much? 1 lakh rupees. Clear? Yes. The first one what they are saying is you have to calculate the NCI and goodwill following fair value approach. Sir, okay, sir. First, let us solve this using fair value approach. Guys, first if you observe, the consideration value is how much? 2 lakh rupees. Clear? Yes, sir. Sir, what is the NCI fair value which they have given, sir? They have given NCI fair value as 1 lakh rupees. If I add these two figures, I will be getting 3 lakh rupees. First, I have to deduct identifiable net assets. In the first case, the identifiable net assets are 2,40,000, sir, which means what is the value of the difference between these two, which is 60,000, is nothing but goodwill. So if you check the first part, whatever calculation which they have did is goodwill is nothing but 60,000 rupees for case 1A. Clear? Yes. Fair value approach only you have to do when the identifiable net assets are 3,30,000, which means let us calculate 1B ka value. Everything will be same. What will be changing? Identifiable net assets only will be changing. Sir, in this case, what is the identifiable net assets, sir? Sir, now the identifiable net assets are 3,30,000 rupees. Sir, now we are getting a negative balance of 30,000. Yes, Baba, we are getting negative balance of 30,000. Therefore, this negative balance is basically called as gain on bargain purchase, which is sweetly called as GBP. Clear, guys? Yes. So the second one, if you check, we are getting a gain on bargain purchase. That's it, guys. Now let us check this part. What they are indirectly saying is, now you have to approach this proportionate share of identifiable net assets in acquiry approach. Sir, here what will be changing? Guys, your NCI value will be changing. Correct or not? Okay, sir, in the first case, if my net assets are 2,40,000, NCI share is 40%, which means NCI value is how much, guys? 96,000 rupees. So if I add these both figures, consideration plus NCI will be 2,96,000. Sir, whatever the net assets which I will be having is nothing but 2,40,000. Therefore, the difference is nothing but 2,96,000 minus 2,40,000. It comes to 56,000. Sir, whatever the 56,000 rupees which I have got, that is nothing but the goodwill ka amount. That's it, guys. This much easier it is. Okay, now let us check the last part also. When the identifiable net assets are 3,30,000. Sir, if identifiable net assets are 3,30,000, NCI value is how much, guys? It is 1,32,000. So if I add these two figures, my balance will be coming to 3,32,000. Correct, sir? Your balance will be coming to 3,32,000. Okay, sir, my balance is coming to 3,32,000. Sir, from this what we have to deduct, guys? Guys, we have to deduct identifiable net assets, which means 330k. So whatever the balance which you are getting, it is nothing but positive figure, and therefore it will be called as goodwill. Guys, this much simple. We have been solving all the questions which they have given in the study material with respect to the goodwill calculation and NCI calculation. Guys, we have completed all standalone questions which they have asked specifically about goodwill and gain on bargain purchase, and NCI also how to calculate fair value, and NCI how to calculate proportionate share in net assets method. Everything we have understood, guys. Clear? Yes. Now I just want to touch upon one comprehensive question which will give you complete clarity with respect to the business combination questions. Means what accounting treatment will be exactly done in your standalone financial statements, and what are the journal entries which you will be passing in your separate financial statements and also in your consolidated financial statements. So if you are having any sort of doubts, everything will be clarified in this question. Clear? Yes. Because this is somewhat a comprehensive question which will be clearing all your doubts relating to the business combination ka chapter. I can say this question as a basic business combination question. Actually, this point is not that much important from exam perspective, because anyways they will not be asking this much basic level questions. But I can say that this question will be a fundamental sort of question. If you understand this, you will be exactly understanding how business combination works. This understanding is very much essential in solving further advanced questions. So I want you guys to definitely watch this question, so that if any doubt is still there in your mind, that doubt will be resolved after completion of this question. So without making any delay, let us start with this question number 1. Here what they are saying is, on 31st March 2021, P Limited have acquired 100% shares of Q Limited. You have to understand here. P Limited is the acquirer entity and it have acquired 100% shares of Q Limited. Guys, you have to understand, entire shareholding of Q Limited is being owned by P Limited only, which means I can say, sir, there is no NCI in this case. Sir, is this correct or not? Answer is 100% correct. Okay, sir. P Limited issued 3 lakh equity shares of 10 rupees that were trading at 16 rupees on March 31st. Sir, what they have given this information is for calculating PC. They are saying, in return to 100% of shares, they have given 3 lakh shares of P Limited, whose face value is how much? 10 rupees. But they are saying their market value, or I can say that their fair value is given as 16 rupees. Guys, we have already know that if shares of acquiring company have been given as consideration to shareholders of acquiring company, Baba, then what you will take? You will take the fair value while calculating purchase consideration. This much simple, which means I can say that my purchase consideration is nothing but 3 lakh shares multiplied by 16 rupees I have to take. If I calculate 3 lakh into 16, I will be getting 48 lakh rupees as purchase consideration. Clear, guys? Yes, sir. Sir, this is very much clear, sir. Sir, okay, fine. Now they have given book values for P Limited and Q Limited also. Guys, one thing you have to understand, this book values of acquiring company are irrelevant for us, because if you remember step number 4, we have understood net assets of acquiring company will be taken over at what values, guys? Fair values you have to take. Fair value is also called as market value. If you check the fair value of acquiring entity, that is Q Limited in our case, it is nothing but 45 lakh. Sir, if you observe, purchase consideration is 48 lakh rupees. There is no NCI, which means even though if I add NCI value, that will be nil, which means my total is 48 lakh rupees. Sir, if I take the net assets ka fair value of acquiring company, which means they have given this 45 lakh. So if I deduct this 45 lakh, whatever the balance which I have got is nothing but a positive amount, and hence it will be called as goodwill. And they have exactly calculated this figure here, goodwill amounting to 3 lakh rupees. Correct or not? Yes. Sir, now what we will be doing is, guys, let us calculate, the question has asked you to pass the journal entry under Ind AS 103, and they are asking you to calculate the summarized balance sheet also after the business combination. Clear? Sir, first let us understand what is the journal entry which they will be passing in their separate financial statements of P Limited. Arey Baba, that is very simple. If you remember, starting itself I have said that separate financial statements they will be following Ind AS 27. If you check, they will pass an entry. Simple, Baba. They have just purchased some shares in another company. So what will be the entry which they will be passing, guys? They will be debiting the investment in shares of Q Limited account debtor. Sir, how much is the value of that? Guys, it is 48 lakh na. Sir, how they have paid the purchase consideration? Guys, they have given equity shares. So what I will be doing is, I will be crediting equity share capital account. Okay, sir. Sir, how many shares you have given? Guys, you have given 3 lakh shares. Multiplied by, sir, what is the face value of the shares? Guys, that is 10 rupees na. So this amount will be 30 lakh rupees. And sir, fair value is 16 rupees, face value is only 10 rupees. Sir, then what about this 6 rupees? Guys, this 6 rupees will be transferred to securities premium account. And trust me, guys, this is the only entry which you will be passing in your books of accounts. I am talking about separate financial statements, guys. Understanding or not? That's it. Clear? Yes, sir. Now, whatever the market value which they have given of this P Limited is not required. Now what we will be doing, we have passed the journal entry in the books of separate financials of P Limited. Now let us draw the balance sheet also after the business combination. Now what I am saying is, I will be passing a balance sheet in standalone financial statement, which means separate financial statements only. So let us check how the balance sheet will be prepared. If you check net assets, how much they have given, guys? They have given 80 lakh rupees. Equity share capital, how much they have given? 60 lakh rupees. Other equity is how much? 20 lakh rupees. Okay. Now what we will be doing is, net assets directly they will be taken 80 lakh rupees. Sir, now what we have done is, this investment in shares is there, that will become an asset. Correct or not? So that will be shown as a asset. So the total 80 lakh rupees plus 48 lakh rupees, it comes to 128 lakh rupees, or I can say that 1 crore 28 lakh rupees. Correct? Yes. Okay, sir, fine. Equity share capital, if you check, already we are having 60 lakh rupees share capital, guys, but currently also we have given some 30 lakh rupees share capital na. Therefore I will be adding 30 lakhs here. So my total share capital will be coming to 90 lakh rupees. If you check the other equity, already they have given the equity of 20 lakh rupees, and now we have passed this 18 lakh rupees also in securities premium na, which will be going and sitting in other equity amount. So which means 18 lakh, so the total 38, and the total value of the liabilities will be nothing but 1 crore 28 lakh. Clear? Yes, this much easy is your separate financial statements. Now let us understand the consolidated financial statements. Guys, you have already known the entry. Correct or not? Okay, sir, we have already know the entry. Guys, what exactly you have to do? guys, you have to bring in the net assets of the acquiring company. At which value, guys? Fair value. That's it, is your journal entry. If you check, sir, net assets I will be taking at fair value. Whatever the net assets which they have given, 45 lakh rupees, that will be taken. Goodwill we have already calculated, 3 lakh rupees. Goodwill is an asset, so it will be coming at debit side only. So debit side only I have written the goodwill, 3 lakh rupees. Credit I will be doing whatever the investment in Q Limited which I have debited, that will be cancelled. That investment is cancelled and you have recognized the net assets of the acquiring entity, and the difference is nothing but a goodwill. So whatever the investment in shares of Q Limited which I have passed in my separate financial statements, now what I will be doing, I will be cancelling that entry. So they have given this consideration account, but according to me that will be investment in Q Limited, because that is the value which you have recorded as a debit side, that will be cancelled. At what amount that will be cancelled, sir? 48 lakh. If you prepare consolidated balance sheet of P Limited, guys, you have to take over all the assets of P Limited at carrying amount, plus you just have to give the effect of this journal entry, then trust me, your balance sheet will be completed. Sir, is that much easier? Guys, that is exactly that much easier. That is the reason why I am continuously stressing upon the easiness of this chapter, which is business combination. That's why I don't want you to miss this golden opportunity of scoring out of out marks in the business combination chapter. Sir, if you check this, net assets of P Limited is how much, sir? Sir, net assets of P Limited is 80 lakh rupees, plus I will be taking fair value of the Q Limited ka assets. Therefore, my total assets will be how much, guys? 1 crore 25 lakh. Sir, whatever the goodwill which I have given, that will be also an asset na. So I will be taking the fair value of the query also, which is 45 lakh rupees. So I have taken 1 crore 25 lakh. 3 lakh is my goodwill. So my total is 1 crore 28 lakh. If you take the equity, existing equity, if you check how much it is, 60 lakh rupees, guys, but you have already issued that na in your separate financial statements. Already that entry ka effect you have to give. So give the effect. Equity share capital 60 lakh, 30 lakh, other equity, security premium 18 lakh. So the total comes to 1 crore 28 lakhs. And that's it, guys. This will give you complete clarity on this consolidated financial statements. These two accidentally have matched. If you check the separate financials also, and the consolidated financials also have accidentally been matched. But the thing is that this will not match all the times. Okay, fine. So this will give you an entire understanding on the question, or I can say that entire business combination will be revised at a glance. So this much easy is the chapter of business combination. However, I am reminding you guys, this much basic question will not be asked in the examination. But if you are perfect in the concept, if you are perfect in this first question, trust me, guys, your business combination is completed. I can say whatever the question which they have given in the examination, at least 60% you can solve, because you can easily solve the purchase consideration calculation, because we have did number of problems, and you can easily solve the goodwill or gain on bargain purchase also, because we have solved a number of problems. And we also know how to solve NCI calculation also. Again, I am saying another thing, you also know what is the entry which you have to pass in the consolidated financial statements or business combination or whatever it is. Then what else you want, guys? What else you want? Nothing you want other than this. Clear? Yes. Now there is another comprehensive question which I wanted to touch. So let us quickly check this. This question, Baba. Yes, sir. Sir, what they will be saying is, on March 31st, 2021, P Limited acquired Q Limited by issue of 3 lakh equity shares at 10 rupees that were trading at 16th on March 31st. One have missed. Summarize the balance sheets of the companies before acquisition. They have given net assets 80 lakh, 42 lakh, 110 lakh, 45 lakh market value. Equity share capital, other equity 25 lakh, 17 lakh they have given, 60 lakh, 20 lakh for P Limited, and for Q Limited also they have given. Sir, what they are asking? Guys, they are asking you to calculate the acquisition cost journal entry under Ind AS 103 and summarize the balance sheet also they are asking you to calculate. Guys, if you check this, is this a repetition of what exactly which we have did in first question? Check. I think all the figures are also exactly same as that of first question. But if you observe, there is one difference which you have to understand. So I want each and every student to pause the video and you have to identify the difference between the first question and the 10th question. Guys, I want every student to participate and you guys have to identify the difference between question number 1 and question number 10. I honestly want you guys to do that activity so that your understanding is at next level. Guys, if you are able to identify the difference between question number 1 and question number 10, trust me guys, I can say confidently that you can score out of that 25 marks, definitely your score will be 22 marks. But you have to try to identify the difference between question number 1 and question number 10. Okay. Yes guys, I hope you have identified the difference, but if you are not identified still, don't worry guys, I will be there to explain you. If you check, here they are saying P Limited have acquired Q Limited. P Limited have acquired Q Limited. You have to carefully observe this wording. They are clear-cutly saying P Limited have completely acquired the Q Limited. Sir, consideration what they have given, sir? Consideration they have given 3 lakh rupees equity shares. If you check the first question, they are saying, sir, P Limited have acquired 100% shares of Q Limited, which means guys, starting I have said you, control can be obtained in 2 methods. The first method, if you remember, if you want, you can acquire the net assets of the company directly without purchasing the shares. Second method, if you want, you can purchase the shares of the acquiring entity to get the control. If you observe, the first method is nothing but whatever the question which we will be solving right now, that is 10th question, because they did not say that you have purchased 60% or 70% or 100% of the shares, which means they are clear-cutly saying you have directly purchased the company itself, which means option 1 acquisition. Guys, I have clearly said that after business combination there will not be acquiring company which will be existing. So if you remember, business combination accounting will be done in separate financial statements only, because consolidated financial statements cannot be prepared, guys, because there is no acquiring entity now. So whose assets you will consolidate, whose liabilities you will consolidate? That is not possible. Therefore, what they are actually saying is, please pass this business combination ka entry and whatever it is in one books only, that is nothing but separate financial statements only. Guys, clear? Yes sir, we have understood totally. And before that, one more thing I just want to check. Okay, before solving the 10th question, you just have to understand this thing. First question, they are asking you to calculate the necessary accounting in the books of acquiring also, guys. Guys, this is something new, but trust me, examiner will never touch this acquiring ka books of accounts, because that is very simple. This business combination ka entire accounting will be done in the viewpoint of acquirer but not acquiree. But still, since the question have asked it, I will be explaining this part also. Guys, here you have to understand one thing. P Limited have acquired 100% shares of Q Limited. Okay, which means if you understood earlier, 100% shares of Q Limited are there by some another person. Now what they have did, P Limited have purchased the shares from such another person. Guys, if you observe, what is the relationship between P Limited and Q Limited here? There is nothing. P Limited have purchased the shares of Q Limited from some third party, which means that third party books of accounts, they will be passing this entry. In other words, Q Limited shares are there earlier, let us say by Mr. X. Now Mr. X have transferred the shares to P Limited. Then why will Q Limited pass any entry in their books of accounts? They will not pass any entry in their books of accounts. after all, that acquiry company will be still continuing, their equity share capital will not be changing, because transaction is between P Limited and the equity shareholders of the acquiry company. Therefore, there is no accounting which will be done in the books of acquiry company in this case. Let us check the answer also. Answer also they have given in the books of P Limited. Sorry guys, I think it is in the books of Q Limited. There is no entry is what you have to understand. Okay, it is wrong guys. It is in the books of Q Limited, because whatever the accounting which we have discussed, that is for P Limited only. Now what you have to understand, in the books of Q Limited there will be no entry which will be passed. Clear? Yes. Now come to our question. Yes. Here what have happened? P Limited have directly acquired the net assets of the company, which means there is no transaction between P Limited and equity shareholders of Q Limited. Transaction is between P Limited and directly and company. If you observe, in this acquisition, in this case, after acquisition, will Q Limited continue to exist, or Q Limited will be closing down its operations? If you observe, the right answer is Q Limited will be completely closing its business. Sir, how you are saying? Because simple guys, net assets itself is taken over by the P Limited. Therefore, Q Limited cannot run its business. Clear? Yes. They have asked you to pass the acquisition journal entry and the summarized balance sheet also they have asked, and they are asking you to calculate the necessary accounting in the books of acquiry also. Guys, this is little bit interesting, so you have to understand. Sir, purchase consideration same as earlier, 48 lakh rupees, fair value also same to same 45 lakh, goodwill is also same to same 3 lakh rupees. Correct? Yes sir. In your separate financial statements, if you observe, guys, trust me, there is no consolidated financial statements which you have to prepare. The reason is very simple guys, because consolidated, in order to prepare the consolidated financial statements, you should have acquiry, but the thing is, after acquisition, the acquiry itself will not be there. So whatever accounting which you have learned, that you can perform in the separate financial statements only. So what we will be doing, first of all, you will be passing one entry, investment in subsidiary account debtor or consideration account debtor. Here I can write investment in shares of Q Limited account debtor, 48 lakh. 2 you have given shares, securities premium also you have given, so 30 lakh, 18 lakh rupees. Here you have to write the figure guys. This is also credit. Okay, next one, net assets you have to take 45 lakh. Consideration you have to debit, credit this consideration, or it can be also called as investment in shares of Q Limited guys. So the debit is 45, credit is 48. The difference is nothing but goodwill. Correct? Yes. So whatever the entry which I have explained here, you just have to give the effect to this part so that your balance sheet will be readied by 1 crore 28 lakh rupees. And the reason also they have explained clearly guys, no consolidated or separate set is required. Clear? Yes. So here you have to understand one thing guys, whatever I have said earlier, that should be compared with this part. Guys, earlier I have said Q Limited 100% shares have purchased by P Limited from another person. Therefore, there will be no entry in the books of Q Limited is what I have explained the logic for the earlier question. If you observe this point guys, in the books of Q Limited, guys, Q Limited will be closing its business now, which means after acquisition, there will not be Q Limited only. So whatever the assets and liabilities of the Q Limited are there now, everything will be shifted to realization account. Sir, what about net assets? Directly they will be shifted to realization account. Sir, what about liabilities? They will also be shifted to realization account. Sir, what about equity share capital? That will also be shifted to equity shareholders account. Sir, what about other equity? Guys, that will also go to equity shareholders account. Clear? And that equity shareholders account ka balancing figure, if there is any, that will be directly gone to what should I say, that will be directly gone to realization account only. Okay, simple. Net assets are there guys, assets are having debit balance, so assets will be closed, so it will be credited, and realization account will be credited. Correct sir? Yes sir. Sir, next one, equity share capital and other equity will be distributed to equity shareholders. correct? So equity share capital credit balance, so we will be cancelling, so it will be debited. Other equity also will be having credit balance, so it will be cancelled, so it will be debited, and this balance will be going and sitting in equity shareholders ka account. If you observe, this equity shareholders have got the shares of K Limited, correct now? This equity shareholders have got, see, whatever the equity shares in K Limited which is there, that will also be transferred and sitting in this equity shareholders account now. So this capital will be transferred here, this is also transferred here, but whatever the consideration which they have received, that will be sitting in equity shareholders ka account, and whatever the balancing figure which is there 6 lakh rupees, that will be transferred to the realization account. And if you open the realization account, this account will be closed because of this difference. That's it guys, that is the only thing which you have to understand. Okay, simple. You can just watch again what I have explained, because this is little bit conceptually important. Clear guys? Yes sir. We have understood whatever you are trying to say, sir. After this, what you have to understand is, this point you have to understand guys, you have to prepare, sometimes they will ask you to prepare consolidated balance sheet of acquirer after business combination. Guys, we have already seen this part. Sir, what we have to do? Guys, acquirer figure all amounts, I mean acquirer company ka balance sheet mein whatever items which are there, for example assets, liabilities, share capital, reserves and surplus, everything you have to take it carrying amount, and you have already did that part. Plus you have to give the effect of this journal entry. If you give the effect of this journal entry, then you will be getting the consolidated balance sheet of acquirer entity post business combination. Clear guys? Yes sir, we have understood the part. Okay, yes guys. So with this we have completed the basic business combination ka concepts. But from now onwards, whatever the concepts which I am explaining, those are 100% asked in exams, or 100% they are capable to come as a next question in your coming attempts. They are that much important. So till now, if you have watched this video, you are conceptually clear in business combination ka questions. But now, I don't know till when this video will be prolonged. But still, from now onwards, whatever the concepts which I have been explaining now, all those will be advanced business combination ka concepts. And again I am repeating guys, these concepts have already asked in exam. They are capable of again coming in the exam as it is with some adjustments, or there are entirely new concepts also which are not as of now they are tested in the exam, but still I am seeing those questions to be coming in your exam very sooner. So what you have to watch, you have to definitely watch the concepts whichever I am explaining from now onwards. Okay, that's it. Okay, yes guys. Now as we have discussed, now let us start the very important concept, which is nothing but step up acquisition. Guys, this concept they have been testing in number of attempts, I can say. Fine sir. So first of all, can you please tell me what exactly is this step up acquisition means? Guys, this step up acquisition is very simple. All you have to remember is this case also business acquisition will be done, but not just in a single transaction or not just in a single purchase. It will be acquired through a series of acquisitions. Sir, what exactly you are trying to say? See guys, the thing is very simple. For example, what have happened is, assume A Limited have invested in B Limited. Assume it have invested first 30% of shares. If you observe, A Limited and B Limited, A Limited have not acquired the control of B Limited till now because it have just acquired only 30%, which means I can say that B Limited is an associate of A Limited but not a subsidiary. And after that, what have happened is A Limited have acquired further 10%. if you calculate the cumulative shareholding, now A Limited is holding 40%. Till still A Limited has not acquired the control in the B Limited. Okay, sir, now what have happened? Later it further acquired further 20%. If you calculate the cumulative shareholding, now I have purchased 40 plus 20, which means I have purchased how much, Baba? 60% shareholding. Now it have acquired control, and this kind of acquisition will be called as step up acquisition. Simple thing, guys. Here the business combination is not achieved in a single transaction. It have acquired through series of purchase. Okay, fine. This is super simple, guys. Trust me. I will be taking only 3 to 4 minutes to revise the concept. After that, we will be starting with all the problems which they have been tested, and study material questions also we will be solving. Don't worry, guys. First one. Acquirer company may obtain control in acquiree company. Till here the thing is normal. Step by step through series of purchase of stake or share in acquiree company. Clear? Yes, sir. In this case, acquirer company obtains control in acquiree company on the date when the entity purchases more than 50% of shares in acquiree company. Sir, what exactly they are talking about? Guys, if you check this example, assume on 1st April 2019 A Limited have purchased 30% shares in B Limited. On this date, is the control transferred to A Limited, guys? Right answer is no, because it have acquired only 30%. Okay, on 1st July 2019 it have acquired further 10%. Sir, can I say that on 1st July 2019 is the control transferred to A Limited? Right answer is no, Baba, no, because on this date the cumulative shareholding is only 40%, but you need at least 50% to obtain the control. Fine. So what happened is on 1st July 2020 it have acquired further shareholding of 20% also. If you calculate the cumulative shareholding, then you have got 60%, which means indirectly on 1st July 2020 you have acquired the control of this B Limited. Clear? Yes. The date of obtaining control will be the date on which the cumulative percentage of shareholding which the acquirer company is having, it exceeds 50%. On the day it have exceeded 50%, that date will be treated as the date on which control have been acquired. Clear? Yes. Sir, the accounting treatment, whatever things which we have discussed, whatever the steps which we have discussed, identification of acquirer company, determining the date of acquisition, calculation of purchase consideration, step number 4, identification of net assets, step number 5, NCI calculation, step number 6, goodwill calculation, step number 7, journal entry, and step number 8, consolidated balance sheet. Everything will be same to same except few points. Clear? Yes. Now, while calculating step number 2, the date when the entity shareholding is more than 50% of the shares in acquiree company, that will be treated as date of acquisition, which means in our example this 1/7/2020 will be treated as the date on which control has been obtained. Clear, sir? Yes, sir. Next point, sir, while calculating purchase consideration, you have to be very careful. You have to calculate the value of the purchase consideration normally in step 3. Plus, you have to also add the fair value of previously held investment in the acquiree company on the date of acquisition. Sir, why we have to add this? Understand with the help of this example, guys. Assume on this date I have made a payment of 30 lakh rupees. Obviously, this will become my purchase consideration, but I have acquired not only this 20% but also earlier 40% also, which means, why I got the control is I have acquired this 20% also for 30 lakh rupees. Not only this, I have acquired earlier 40% as well. So you have to consider that earlier investment also. while calculating purchase consideration. Clear? Yes, sir. Whatever the purchase consideration which you have calculated, for that you have to add the fair value of previously held investment also. Remember guys, here you have to add the fair value of the previously held investment. The question may mentions about the carrying value, but still you have to find out the difference between carrying value and fair value, and you have to transfer the difference to the P&L account. And whatever the fair value which is there of the previously held stake in the acquiring company, that will be added to the purchase consideration, which is calculated in the step number 3. That's it, you have to understand. While recording the journal entry for the business combination on date of acquisition by the acquirer company, this is the adjustment which we will be doing in CFS. Whatever the previously held investment which you are having, whatever it is, you just have to cancel that investment at carrying amount only. What you have to do guys? Yes sir, I have to cancel the investment at carrying amount. Sir, in my books I have passed the entry investment in subsidiary account data to bank account. Is 30% and 10% correct na? Their consolidation will not be prepared because earlier it was not my subsidiary, but now it has become my subsidiary. So whatever the investment which you have booked earlier, please reverse that investment. Sir, how to reverse that investment? Guys, investment will be having debit balance. Now credit that investment at carrying amount. Fine sir. But while calculating purchase consideration, sir, you have said that you have to calculate the fair value of the previously held investment. Sir, but journal entry time you are saying you have to pass the journal entry at the carrying amount. Sir, what happens to the difference between carrying amount and the fair value? Guys, that you have to transfer the amount to the profit and loss account. Whatever the difference which is there between the carrying amount and the fair value of the investment, that will be transferred to the P&L account. Simple. Recognize the gain or loss due to remeasurement of previously held investment in the acquiring company at the fair value in P&L account. That's it guys. One small thing you just have to understand. Sir, in this case, if you observe, on 1/4/2019 itself, this B Limited is nothing but associate of A Limited, which means A Limited will already prepare the consolidated financial statements as per Ind AS 28 na, which is under equity method, correct or not? So if you have any balance, if acquirer company में if there is any OCI reserve का balance of acquiring company, that should be de-recognized. Sir, how it will be de-recognized? Arey Baba, if that is recyclable to P&L account, just directly transfer that to P&L account. Sir, if it is not recyclable to P&L account, simply then you just have to transfer the same to retained earnings according to the nature of OCI reserve. This point is pretty simple guys. If earlier associate accounting has been done, if there is some balance which is left in the OCI reserve, what you have to do is you just have to de-recognize such amount. If that amount is recyclable to P&L account, go and transfer the amount to the P&L account. Otherwise, you have to transfer that amount directly to the retained earnings. That's it guys. That's the only care which you have to take in this consolidated balance sheet with respect to the step up acquisition ka concept. Only first thing which you have to remember is the date of acquisition you have to remember. Second part is you have to include the fair value of the previously held investment in acquiring company on the date of acquisition. These two you have to remember while passing journal entry. Whatever the investment which you have debited, that will be credited at carrying amount and profit or loss will be transferred to the P&L account. That's it guys. That is the thing which you have to remember. So let's quickly solve one example. So yes guys, this one if you check, yes sir, entity A acquired 35% of entity B on 1st April 2019 for 35,000 rupees, which means on 1st April 2019 it have become associate. Okay, carrying amount is how much sir? Cost is nothing but 35,000 rupees. rupees. They are saying on 31st March 2020, fair value of the shares is how much, Baba? 42,000. Cost is 35,000. Sir, what about fair value? Guys, that is 42,000 rupees, and they are saying thus 7,000 rupees is reported under OCI in 2019-20. Sir, what they are indirectly saying is, Baba, what you have done is investment in B account debtor to OCI reserve. Guys, fair value is increased, therefore your investment value have to be increased. Sir, how much it should be increased is 7,000 rupees is the entry which they would have been passed on 31st March 2020. Now what have happened on 1st July 2020, entity A have acquired further 40%. Guys, earlier it have acquired 35%. Now it have acquired further 40%, which means it have acquired 75%. Now it have acquired the control. Consideration paid is how much, sir? 60,000 rupees. Entity A identifies the net assets of entity B at a fair value of 1,20,000 rupees. At the acquisition date, sir, identifiable net assets are nothing but 1,20,000 rupees. And they are saying value of the 35% shares earlier was how much? 45,000. Sir, they are indirectly saying this as a fair value of the previously held investment. What you have to calculate, and they are also saying NCI is valued Pasina method. Sir, while calculating purchase consideration, what are the things which I have to take? This 60,000, which means whatever the consideration which you have paid, that you will be adding, plus fair value of the previously held investment, guys, that is nothing but a 45,000 also I will be adding. Okay, 75% is my shareholding. Sir, what about 25%? Guys, NCI ka value is nothing but 25%, but I have to calculate in Pasina method, which means 1,20,000 into 25%. If I take, the value is nothing but 30,000 rupees. So if I add all these figures, it comes to 1,35,000 minus you have to deduct the identifiable net assets. Sir, therefore I got the goodwill of 1,35,000 minus 1,20,000, which is nothing but a 15,000 rupees. Guys, is it clear? Sir, yes sir, we have easily understood this point. Okay, this is the only thing which we have to do, guys. One more thing you just have to identify is, sir, on this date the carrying amount is how much, sir? On 31st March 2020 it is 42,000 rupees, but as on acquisition date the value of the investment is 45,000 rupees. Correct or not? Yes. So whatever the difference which is there, let me write here. Earlier the carrying amount is how much, Baba? 42,000 rupees, but fair value on the date of acquisition is how much, sir? 45,000 rupees, which means balance 3,000 also will be credited to P&L account directly, because this is the difference between the carrying amount and the fair value. So that will be transferred to the P&L account directly, guys. Okay, if you check the entry, earlier whatever the OCI balance which is there, that will also be transferred to P&L account. This 7,000 I have said correct. This OCI reserve ka balance, now that will also be transferred to P&L account, and this 3,000 rupees also will be transferred to P&L account, which means ultimately whatever the amount which will be transferred to the P&L account is nothing but 10,000 rupees. So, and also we have calculated the goodwill amount also, which they have calculated, that is exactly matching with our answer, which is 15,000 rupees. Sir, what is the journal entry which I have to pass, sir? Sir, journal entry is very simple, sir. First of all, you have to take all the net assets. How much, sir? 1,20,000 rupees. Goodwill is there, sir. 15,000. Sir, consideration I have paid how much, sir? 60,000 you have paid. And previously held investment is also there. You have to cancel that investment. Sir, how much, sir? 45,000. Sir, can I do this at carrying amount also? Answer is you can do that at carrying amount also. Here what I have did is, see, you have to increase the investment by 3,000 rupees. And you have to also transfer whatever the earlier OCI balance which is there, which means entire balance will be sitting into this 10,000 rupees. Sir, earlier what is my investment value? 42,000. since you have debited this 3000 rupees, so that will also be credited, which means this is the net entry which they have passed, guys. See, ultimately what is there is 42,000 is the balance which is there in your books. Now your investment is increased by 3000 rupees, therefore they have increased the investment by 3000 rupees. So also OCI reserve is earlier having credit balance, so now they have debited the OCI reserve. Where is it? Yes, it is. Balancing figure will be transferred to P&L account, and also NCI also they have to be transferred, guys. That's it, is this step up acquisition ka concept. That much simple, that much simple, guys. So that's it, guys. This 18th question is by mistake they have repeated the exact same question which we have discussed now, which is the 6th question. So you can strike off this 18th question, guys. This is of no use, we have already covered this question. So after this, if you observe, let us quickly come to this 9th question, guys. If you check this, A Limited have acquired 35% of B Limited for 3,50,000 rupees. Fair value of shares of B Limited is how much? 4,20,000 rupees. Okay, here you have to write and. Sir, cost is how much, sir? 3,50,000. Sir, fair value is how much? 4,20,000, which means they have already passed this entry. Sir, what is that entry? Arre Baba, investment in B Limited, account debtor to OCI reserve. Sir, how much is the amount, sir? 70,000 is the amount, Baba. Clear, sir. Because earlier it is how much, sir? 3,50,000, but now it is increased to 4,20,000 rupees. Sir, on 1st April 2024, what have happened, sir? A Limited have further acquired 40% for a consideration of 6 lakh rupees, and they are saying A Limited identifies the assets of B Limited as 12 lakh rupees and values 35% at 4,50,000 rupees. Okay, sir, what about NCI ka portion, sir? Have they said anything about this NCI? They are asking you to calculate the amount to be transferred to P&L account in the 23-24. They are asking. See, acquisition is happened on 24-25. So now what you have to understand, sir, whatever the amount which should be transferred to P&L account is nothing but, see, this what have happened is, I think this they have asked somewhat wrong. This should be 2024-2025, guys, because consideration is happened, acquisition is happened in 24-25, which means earlier OCI reserve amount is there. Sir, how much it is? 70,000 rupees. This amount will be transferred to P&L account. But now also the investment value is 4,20,000 rupees according to you. But fair value of the previously held investment is how much, sir? 4,50,000 rupees. So this difference of 30,000 rupees also will be transferred to the P&L account. Now if you calculate the goodwill or gain on bargain purchase, Arre Baba, see, this fair value of the consideration, which means whatever they have given, 6 lakh rupees you have to take, correct ya nahi? Yes, sir, 6 lakh rupees I have to take, plus whatever the earlier investment which is there, that fair value also I have to take, which means 4,50,000 also I will be taking, sir. 35% plus 45%, which means nothing but 75% I have acquired. Clear, sir? Yes, sir. So here I will be calculating this Pasina method ka thing. 12 lakh into 25%, which means 3 lakh is nothing but the NCI ka value. So if I add all these figures, I will be getting 13,50,000 rupees. Sir, but what about INA? Identifiable net assets are nothing but 12 lakh rupees na. So if you calculate this 12 lakh rupees, sir, whatever the balancing figure which I have getting, that is nothing but 1,50,000 rupees is my goodwill. That's it. This much simple, guys. That is the reason why I have been saying that these step up acquisition questions are that much simple. Okay, next question, if you check this one, guys, very simple question, guys. This is, if you check this, they are saying K Limited is holding 30% stake in A Limited. The investment is accounted for as an investment in associate as per Ind AS 28, and the carrying amount is how much? 140 lakh rupees. K Limited purchases the remaining 70% stake also for a cash consideration of 980 lakhs. Sir, earlier how much shareholding they are having, sir? 30%. Plus afterwards what they have acquired? 70% they have acquired later. So entire 100% of this L limited have belongs to K limited. Therefore, no NCI is what you have to observe, guys. Sir, balance 70% is for how much amount, sir? 980 lakh rupees. Okay, fine, sir. Sir, earlier investment के लिए fair value also they have clearly given that as 420 lakh rupees. Okay, next one, identifiable net assets also they have clear cutly given 1120 lakhs. Since there is no NCI, even if I add also, I will be getting nil. 980 plus 420 minus 1120, which means nothing but this 280 lakh is nothing but my goodwill. Correct, sir? Yes. This 140 lakh and this 420 lakh. So that 280 lakh will be transferred to P&L account also. Okay, guys, this 280 lakh is goodwill and this 280 lakh is nothing but difference between this investment, which means this 420 lakh and 140 lakh. The carrying amount and fair value of the investment, you will be transferring that to the P&L account. That's it. That's it, sir. To gain on fair value of previously held investment, that is 280 lakh rupees, will be transferred to P&L account. Net identifiable assets will be taken over. Bank investment in associate will be credited, and goodwill account also will be there. That's it, guys. That's it. Yes, guys. Guys, another question. Guys, this is an exam question which have asked for 14 marks question. Just after reading the question, you guys have to tell me, sir, is this question is tough or is this question a cakewalk for us? After solving this question, guys, you have to definitely respond me in the comments that is this question easy or tougher. Fine. On 1st April 2023, M Limited acquired 30% of the ordinary shares for 8,000 crores rupees. Oh, 8,000 crores, 30%. M Limited accounts for its investment in N Limited using equity method of accounting. Guys, this is because earlier N Limited is an associate company of M Limited. Therefore, they have calculated equity method of accounting. Sir, fine, sir, fine. That is very much simple. On 31st March 2024, M Limited accounts for its share of net assets in N Limited as per equity method of accounting. Fine. Share of profit is 700 crore. Share of exchange difference in other comprehensive, this is 100 crore, and share of revaluation reserve of PPE 50 crore rupees. If you observe all these amounts, because of all these amounts in equity method of accounting, your investment value will be increased. Sir, why it will be increased? Arey baba, it is simple. See, you got a profit of 700 crore rupees. In associate accounting ka equity method, what you will be doing is you will be debiting your investment account and you will be crediting your P&L account, which means investment account data to share of profit account 700 crore rupees. Next one, they are saying share of exchange difference in other comprehensive income, which means my OCI reserve will be increased. So I will be crediting the OCI reserve and my investment balance will be increased, which means I will be passing entry like this, investment account data to OCI account, which is 150. They are talking about 100 crore is about exchange difference and 50 crore is about the revaluation reserve of PP something. This is also not that much important, guys. If you add all these things, because of all these things, my investment balance has increased. So now if you observe the carrying amount as on 31st March 2024, if you check, earlier you have purchased for 8,000 crores plus 700 plus 100 plus 50. If you do, they have only directly given in the question the carrying amount of the investment is 8,850 crore. Fine, sir. On 1st April 2024, M Limited acquired further 70% of ordinary shares, which means now it is 100% subsidiary of M Limited. Yes, 100% subsidiary of M Limited, which means, guys, there is no NCI also. Still our question have become very much easier because there is no NCI also. Sir, what is the consideration which they have paid? 25,000 crores, Baba. Clear? Yes, sir. They have said that fair value of earlier held interest is 9,000 crore rupees and identifiable net assets value they have given of 30,000 crore rupees. Guys, please check what they have asked in the question. First one, you have to find out the date of acquisition. This much simple they have asked. Sir, what is the date of acquisition? Simple. The date on which you have crossed more than 50% will become your right away date of acquisition. If you check On 1st April 2024, you have purchased further 70%, which means on this date only you have acquired the control. So if you check, the date of acquisition is nothing but 1st April 2024. That's it, guys. That's it. Second one, if you check, sir, we have to calculate the gain on previously held investment and suggest the accounting treatment on acquisition date as per Ind AS 103. Sir, what is the carrying amount, sir? 8,850 crores, Baba. What is the fair value, sir? 9,000 crores. Sir, what is the difference? Simple, 9,000 minus 8,850. If you check the difference between fair value and carrying amount, that is 150 crores will be transferred to P&L account. Correct? Yes. Sir, earlier also I am having some balance of this OCI. This balance also has to be transferred to P&L account. I mean, this balance should be de-recognized. Correct or not, sir? Yes, sir, that is correct. If you remember very basics, this exchange difference in other comprehensive income is directly recyclable to P&L account. But this revaluation reserve on PPE is non-recyclable item, which means this 50 crore will be transferred to retained earnings. This 100 crore will be transferred to P&L account. Sir, therefore, can you please give me the entry? Yes, Baba. See, OCI balance will be debited because earlier we are having credit. Okay, 150 to P&L account. Sir, what is the balance which can be directly recyclable? It is 100, and non-recyclable amount will be directly transferred to either retained earnings or other equity. Anything you can write. Okay, so this is the journal entry which you have to write, and this 150 crore is there now, that also will be transferred to P&L account. The same thing which they have explained in theoretical format. If you observe, this is the thing, gain on previously held interest they are asking, that is nothing but 150 crores which you have to transfer to the P&L account. That's it, guys. They have explained theoretically and they have calculated this part. Third question, if you check, they are asking you to calculate the amount of goodwill arising on the acquisition of N Limited. Sir, how you have to calculate the goodwill, sir? First of all, we have purchased 75% for 25,000 crores. Earlier held investment ka fair value you have to take, which means 9,000. So if I add these figures, I will be getting 34,000 rupees. From this, you have to deduct INA, identifiable net assets. Since you have got the positive amount, this 4,000 is nothing but a goodwill for you. Check the answer, guys. Goodwill 4,000 crores. These are the level of questions which they have asked in the exam with respect to this step up acquisition. If you check the last part, they are asking you to calculate the necessary journal entry on the acquisition date. Simple, guys. See, you have to take the net identifiable assets, 30,000 crores you have to take. Goodwill account, that you have to take the 4,000 rupees. Guys, this amount is nothing but OCI reserve na. So this OCI reserve only they have explained it with a different name. See, if you observe, retained earnings ka balance, what I have did, sir, I have transferred to P&L account. Correct or not? Investment in associate limited, how much you are having, guys? 8,850 we are having, because you have to de-recognize that at carrying amount. Correct or not? The balancing figure will be transferred to 250. Sir, what exactly is this balancing figure 250? Guys, if you observe, out of this 250, 100 rupees is relating to 100 crores is relating to this amount which is recyclable. Yes, sir. And balance 150 rupees is 150 crores is nothing but this difference, that is difference between carrying amount and fair value of the investment. So this 150 crore and this 100 put together, it will come to 250 crore. Guys, they have passed one combined entry. If necessary, we can pass two separate entries also. Trust me, guys, this is the exam question which they have asked for how much? 14 marks. What is there in this? They have not even asked about the consolidated balance sheet also. Guys, this much easily they will be asking questions when it comes to step up acquisition. So even 8C question also they are asking mainly on this concept only. Correct? Yes. So this is the level of questions which they are asking about step up acquisition. After this, one question is there, but that question they will not ask in the exam, but still I have included it in the part of step up acquisition only. The reason being, that is also one comprehensive question which will be giving you 100% of identity, 100% of clarity on this step up acquisition ka concept. Sir, will you be discussing that question right now? Answer is no, Papa, no. I will be discussing that question at the end of the video. After completion of further important concept, which means reverse acquisition and common control transactions, super important transactions, these two. After completion of these two questions, these two concepts, then I will be explaining that question. Basically, it is nothing but a comprehensive question. So where I have included is, this is also your study material question only, guys. This is not my own question. So this 20th question will be solving towards the end. So since we have completed complete information, everything related to step up acquisition we have already completed. So now let us quickly move to another most important concept, which is nothing but reverse acquisition. Most of the students will be terrified about this reverse acquisition. So whereas I have prepared easy analysis, if you just go through that analysis, trust me, you are done with reverse acquisition. No need to even revise the reverse acquisition also again. You just have to watch the reverse acquisition and you just have to understand what I am explaining. That's it, guys. That's it. So step up acquisition is done. So yes, guys, now another super important concept from the exam perspective. It is nothing but reverse acquisition. Guys, I have already introduced this concept of reverse acquisition as one of the most toughest concept from the student's perspective, because I have seen many of my friends who are pursuing CA final at that time, they have found this reverse acquisition concept very tough. But trust me, guys, I will explain you complete logic behind the reverse acquisition so that you will never forget this reverse acquisition. This is very important from exam perspective. So straight away they can ask reverse acquisition question in the examination. Already they have asked it in December 2024 attempt, guys. Okay, sir, fine. We are ready to understand the logic behind the reverse acquisition. Super, sir. So let us start the reverse acquisition. Sir, what exactly is the meaning of reverse acquisition? You have to understand, guys. Generally, till whatever the questions which we have solved till now, in all the cases, guys, whoever is the person who have given the consideration, whoever is the person who have issued the consideration, that is the same person who got the control. Correct or not? Yes, sir. What exactly you are trying to say? Guys, in many problems we have thought like this, that like P Limited acquired Q Limited and P Limited have paid some consideration to Q Limited. Like this only we have solved, which means the person who have paid the consideration is the same person who have obtained the control. Correct or not? Yes. In 99.99% cases, whoever is the person who is paying the purchase consideration, that person will directly become the acquirer. That is the general point. But there is one exceptional case in which whoever the person who is paying the purchase consideration, that person and whoever the person who is acquiring the control are not same. And this is nothing but the concept of reverse acquisition. I am repeating again, whoever is the person who is paying purchase consideration and whoever is the person who is obtaining control, both are two different persons, and therefore the term reverse acquisition. Sir, can you give us one example? Definitely I will be giving one example, guys. Try to understand this question. Fine, sir. There is one company A Limited, there is another company B Limited. If you look at balance sheet of A Limited is having 1 lakh equity shares and B Limited equity share capital, B Limited is having 60,000 rupees ka shares. Sir, now what have happened? Guys, this A Limited acquired B Limited. Sir, how this consideration have paid, sir? A Limited have issued 2.5 shares in exchange of 1 share of B Limited as purchase consideration. Guys, if you calculate the purchase consideration, currently B Limited is having how many shares, guys? 60,000 shares. Sir, what they are saying purchase consideration, they will be issuing 2.5 shares for every 1 share of B Limited, which means since 60,000 shares are there for B Limited, they will be giving 60,000 into 2.5 shares, which is nothing but 1,50,000 shares. Correct? Yes. Which means 60,000 into 2.5 shares. So B Limited shareholders will be getting 1,50,000 shares. Clear, sir? Yes, sir. We have understood the concept. Now what have happened? Already A Limited is having 1 lakh shares. Now they have issued 1,50,000 shares to B Limited. Guys, if you observe, sir, who is the person who is paying the consideration? Guys, it is obviously nothing but A Limited. Yes, sir. Keep that point in your mind. After business combination, the number of shares for A Limited is nothing but 2,50,000 shares. For fun, let us calculate percentage of shareholding after business combination ka treatment. A Limited is having only 1 lakh shares. If you calculate percentage holding after acquisition, I have got 40%. Shareholders of A Limited is now having only 40% of shareholding in the combined entity, which means shareholders of B Limited is having 60% shares in combined entity. Guys, if you observe, the person who have paid the consideration is nothing but A Limited, but if you observe the substance over form, it is B Limited who have acquired the control in this transaction, and hence this will be called as reverse acquisition, guys. Okay, sir, we have understood the example of this reverse acquisition. The person who is paying the consideration is different and the person who is obtaining the control is different. Fine, sir. Sir, now how accounting treatment will be done and all will be understood. Guys, from the starting itself, I have been saying this. Ind AS will look into substance over form. If you look the substance, it is A Limited who have acquired the B Limited. Entire world is thinking the same because A Limited is the person who have paid the purchase consideration. So entire world is thinking A Limited is the acquirer. But because of Ind AS, they have given importance to substance over form, which means you have to understand the real substance. Then you will identify it is not A Limited who have acquired the control. If you observe, it is B Limited who have acquired the control, and you have to do accounting as per this part only, which means from the world perspective, in the eyes of world, it is A Limited who is called as acquirer. Guys, this can be called as A Limited will be treated as legal acquirer. Legally, it is the person A Limited who have become the acquirer. Then B Limited will become legal acquiree. But for accounting purposes, guys, you have to remember it is A Limited who have it is B Limited who have got the control. Therefore, for accounting purposes, B Limited will be treated as accounting acquirer. Now you have to do the accounting as if B Limited have gone ahead and acquired A Limited. This is the real game starts now. So students have to place complete clarity in their mind that we have to do accounting as if B Limited have acquired A Limited. Clear, sir? Yes, sir. Because in the accounting perspective, this B Limited will be treated as accounting acquirer. But in the eyes of world, A Limited is nothing but legal acquirer. This point you have to understand. Fine, sir, we have understood that point. Now let us discuss the steps to calculate. Whatever the steps we have discussed, those 8 steps with slight changes, our answer will be different, guys. So guys, for accounting purposes, who have acquired whom? This you have to remember. So the first step will be identification of acquirer company. Sir, in this case, as I have said that we have to do accounting as if B Limited have acquired A Limited. So now B Limited will become accounting acquirer. Clear, guys? Yes, sir. Second step, guys, determine the date of acquisition. Sir, how I will be determining the date of acquisition? Guys, that is pretty simple. You already know that. So same as we have discussed it above. Now comes the most challenging part, and I can confidently say that I will be delivering you 100% logic behind this, the step number 3, because this is the mother step. If you understand this, reverse acquisition will become a cakewalk for you. Clear, sir? Yes. Step number 3, calculation of deemed or notional purchase consideration. Guys, you have to understand this thing. Sir, who is the actual person who have paid the PC? Guys, it is A Limited who have paid the purchase consideration, but that purchase consideration which is paid by A Limited to B Limited is totally irrelevant in the question. You have to understand that. So even if they have given any purchase consideration which is paid by A Limited to B Limited, please ignore that consideration, because for accounting purposes we have assumed that B Limited have acquired A Limited. So we have to continue our assumption that B Limited will be paying some purchase consideration to A Limited. Since that is not actual consideration which is paid by B Limited to A Limited, I have given the name to that consideration as deemed purchase consideration or notional purchase consideration, because this purchase consideration is not actually paid in real by B Limited to A Limited. Clear, sir? I have understood this point. Guys, this is given in one formula, and now I will be explaining you the complete logic behind this formula. So try to understand this part, guys. Sir, what I will be doing is, B Limited will be issuing equity shares to the A Limited. B Limited will be discharging the PC in the form of equity shares to A Limited. This is the assumption which you have to take. Okay, sir, we have understood that B Limited will be issuing some equity shares to A Limited. Clear, sir? Yes, sir. Sir, first I will be calculating fair value of B Limited. First, I will be calculating fair value of B Limited, which is nothing but accounting acquirer, because first I will be calculating my fair value. Fine. What I will be doing is, I will be multiplying that fair value of mine with number of shares which I want to issue to accounting acquiree, that is A Limited. Clear? Yes. First, I will be calculating fair value per share of my company, that is accounting acquirer. Now I will be multiplying that fair value with the number of shares which I want to issue to accounting acquiree, that is A Limited in the case. Okay, sir, I have understood this point also. So now our objective is to calculate number of shares which B Limited wants to issue to A Limited. This is the logic which you have to understand, guys. Sir, how many shares exactly being held? How many shares exactly being held by the B Limited before business acquisition? You have to understand. Sir, before business combination, B Limited is having, assume, okay, I will come to this example a little bit later, but how you have to understand this logic is, whatever the shares which accounting acquirer is having right now, in order to maintain the same shareholding percentage post acquisition, which means this 60%, in order to maintain 60% control in mine after acquisition, how many shares I have to issue? That is the logic which you have to observe here. Simple point, guys. Once again I am repeating. Currently I am having 60,000 shares. Okay. In order to maintain 60% control after business combination, how many shares I have to issue? Which means I will be multiplying this 60,000 rupees divided by 60%, which means 1 lakh shares should be there after business combination, out of which 60,000 shares will be belonging to accounting acquirer, which will give them 60% of the control. Understanding or not, guys? You have to calculate, sir, how many shares will be having by B Limited in order to maintain the same percentage after business acquisition with the existing number of shares. That will be calculating. And Obviously, so now I will be getting total number of shares which B Limited will be having. From that I will be deducting how many shares are there for B Limited. Then I will be getting how many shares I want to issue to A Limited. And you just have to multiply that figure with the fair value per share of accounting acquirer. Clear guys? Yes sir, we have understood the whole logic. One last time I am repeating. So guys, listen. First, I will be calculating fair value per share of accounting acquirer. I will be multiplying that value with the number of shares which I wanted to issue to accounting acquiree. Sir, how I will be getting number of shares which I want to issue to accounting acquiree? What I will be calculating is, first I will be calculating total number of shares which I want to issue. Okay, in order to maintain post combination percentage, in order to maintain post business combination ka control percentage with the existing same number of shares. So how many shares I have to issue? I will be calculating total number of shares. From this I will be calculating how many shares accounting acquirer is having before business combination. So this difference is nothing but the number of shares which I want to issue to the acquiree company, that is accounting acquiree. If you look at this example, you will be understanding exactly what I am trying to say. Fine sir. Let us assume fair value per share of B Limited is 40 rupees which they have given. Now I will be calculating deemed purchase consideration given by B Limited. If you observe, 60,000 is nothing but the number of shares. So in order to maintain 60,000 shares, in order to maintain 60% control of this, the number of shares which I have to give is nothing but 1 lakh shares. But sir, these 60,000 shares are already belonging to B Limited na. So how many shares I have to give sir? Balance 40,000 shares we have to issue, and that should be multiplied by fair value per share of accounting acquirer guys. So 40,000 into 40, if you take 16 lakhs. So this is the consideration which I have calculated as notional consideration, which will be paid by issuing equity shares of accounting acquirer. That's it guys. This is the only step which you have to pay 100% attention. Next steps are very easy guys. Now you have to take step number 4, which is nothing but all net assets of accounting acquiree, which means accounting acquiree guys, which means this is A Limited. Okay, fine sir, this A Limited ka net assets will be taken over at fair value. And next part, because it is B Limited who have acquired the A Limited, which means you will be taking all the values of B Limited at carrying amount only, but the values of A Limited will be taken over at fair value guys. Fine sir. Step number 5, you have to calculate NCI. Generally our institute will not make it much complicated by giving NCI in our adjustments. It may be practically possible, but from exam perspective, NCI will not be giving in the examination. Fine sir. Step number 6, same baba, purchase consideration you have to take. Since there is no NCI, you will not be adding minus net assets of accounting acquiree you will be taking guys. Accounting acquiree, just a small mistake, accounting acquiree means I will be taking A Limited here. Fine sir. Now I will be getting goodwill or gain on bargain purchase. Fine. So now what I will be doing, I will be passing journal entry for business combination by accounting acquirer on date of acquisition. That will be exactly same. Step number 8, if you observe, you have to prepare consolidated balance sheet by accounting acquirer on date of acquisition. So all assets of accounting acquirer will be taken over at fair value, at carrying amount, and give effect of business combination entry, which means whatever the assets which you have taken over of A Limited, which is accounting acquiree, that will be taken over at fair values only guys. That's it. That is the concept of the reverse acquisition which you have to understand. That's it guys. That is the only thing. There I have given some miscellaneous notes that is not at all important for you. Even if you go through these points, you will be easily understanding the things guys. That's it. This is the reverse acquisition ka concept. Another concept which you have to understand, which is somewhere related to this, reverse acquisition, and that is nothing but accounting for mergers which are in the nature of reverse acquisition. And this is the question which they have been asked in the exam in the recent attempt, that is December 2024, guys. If you check, this is very simple. I will be just explaining very fastly. Assume A Limited is there. Earlier it is controlled by Mr. A. Assume there is another entity which is B Limited, which is controlled by Mr. B. Now these both companies agreed together and they have formed AB Limited. Okay sir? Yes sir. If you observe normally, this AB Limited will be called as legal acquirer. This A Limited and B Limited will be treated as legal acquirees. But if you observe substance over form, in this AB Limited, it is nothing but Mr. B who have obtained the control. If you observe, guys, this is also a classic case of reverse acquisition, because the person who is paying the purchase consideration is AB Limited, but the person who have obtained the control is nothing but this B Limited, indirectly through Mr. B. Correct or not? Therefore, what you have to do is this B Limited will become accounting acquirer, and B Limited should apply the reverse acquisition accounting as to how exactly which I have said you. Means step number 1, step number 2, like this you have to do. But only one thing you have to remember, consideration ka point. Sir, what is the consideration ka point which I have to remember, sir? They will not give you actual legal PC in this question. Question will give you hint. Question will never share you how many shares they will be issuing. So it will clearly say that you have to issue requisite number of shares to discharge the claims of both companies. Therefore, actual PC will be nothing but fair value of the businesses. So they will be giving you fair value of the businesses, and you have to bifurcate the fair value of businesses, and you will be solving that question very easily, guys. Trust me, I will solve the important questions of study material question. I will be solving every question from reverse acquisition, and I will be solving one exam question also, so that it will give you complete clarity as to what exactly I am trying to say. Guys, we have taken only 20 minutes to make you understand the entire concept of reverse acquisition. So after solving the problems, trust me guys, you can solve you whatever the question which they have been given in the examination, because the question which they will ask for is nothing but 14 marks, guys. So you can easily get the answer. Yes, so let us, without making any late, let us directly start with the questions. Yes guys, so now let us check this simple question, then we'll move to the examination question, guys. Fine. So here what they are saying is, they are clearly saying reverse acquisition taken place as H Limited acquires 100% equity shares of S Limited. Who have acquired 100%? H Limited have acquired 100%. Obviously, as I have said, there will be no NCI in this reverse acquisition. From the following data, they are asking you to pass the journal and prepare the consolidated and separate balance sheet in the books of H Limited. Guys, one thing you have to understand is, see, in the eyes of world, it is H Limited who have purchased the S Limited, which means H Limited only will be preparing two sets of financial statements. One is separate financial statements and another one is consolidated financial statements. But if you observe, it will do business combination accounting as if S Limited have acquired H Limited, which means H Limited only will be preparing two sets of financial statements. One set of financial statements, separate financial statements, second consolidated financial statements. It will make the accounting as if S Limited have acquired H Limited, but still that will also be in the books of H Limited, only that consolidated part will be. Okay, this is the thing which you have to understand. That is the thing which I have explained in the note, but accounting will be same as it is. Fine, sir. They have given book values of H Limited and S Limited, non-current assets, current assets and total. Till here they have given the total value of assets. And if you check equity share capital, they have given other equity, non-current liabilities, current liabilities. So if you check, they have been given the total of the assets and liabilities. This is the important thing, guys. They are saying H Limited and S Limited shares are quoted at 20 rupees and 50 rupees respectively. H Limited issues shares in exchange ratio based on quoted price. And they have given fair value of non-current asset of H 2400 and 3200 also. Clear, sir? Yes. Guys, here you have to understand, H Limited is clearly said that they have issued shares in exchange ratio based on quoted price. Sir, first let us calculate the fair value of the business. See, what they are trying to say is H Limited have issued equity shares to S Limited based on market price, guys. Sir, which means if I calculate the worth of this S Limited, it is nothing but number of shares are how much, guys? 80 rupees multiplied by the fair value of S Limited is how much? 50. Therefore, fair value of S Limited is nothing but 80 multiplied by 50. So if I calculate this 80 multiplied by 50, it will come to 4,000 rupees is the value. Sorry, it is 4,000 lakh is nothing but the value of S Limited, and H Limited will be giving shares. Sir, how I got this? They have clearly said that 100 shares is the things which they have been given, which means 10 rupees the face value. Correct or not, Baba? Yes, but you should not calculate like that. You have to take the fair value, that is 20 rupees, which means if I do that calculation, 4,000 divided by 20, which is nothing but 200 shares will be issued to B Limited, that is S Limited. See, this nominal value you should not look, because obviously shares will be issued based on the fair value of the acquirer, correct? So which means if you check this 20 is nothing but the fair value, so you have to find out this 200 shares will be given to S Limited, which means, guys, total number of shares of H Limited, if you calculate, it is already having 100 shares, plus it will be now issuing 200 shares to S Limited, which means after acquisition, if you check, this 100 shares will belong to H Limited, and S Limited ka percentage holding, if I calculate, that will comes to 200 divided by 300, which means, sir, it is nothing but 66.67%. Okay, fine, sir, this is nothing but S Limited holding. Therefore, it is the case of reverse acquisition, and I will be doing the accounting as if this S Limited have acquired the H Limited. Guys, I will be making the calculation of here, which calculation is nothing but the deemed or notional purchase consideration, the calculation. This is very simple. If you remember, fair value per share of accounting acquirer you have to take. Sir, here who is the accounting acquirer? S Limited is the accounting acquirer, and this 50 rupees is the fair value. So I will be multiplying this 50 multiplied by, sir, whatever the existing number of shares which this S Limited is having, it is nothing but 80. So I will be doing like this, 80 divided by 66.67% minus 80. This is the formula which I have explained earlier, guys. So if I deduct this 120 minus 80 multiplied by 50, it is nothing but the deemed or purchase consideration which you have to calculate, and the same consideration they have given even here also. Clear? Yes, sir. So after that, let us calculate the goodwill calculation, guys. It is simple. You have to take consideration, that is 2000, and you have to take the net assets of the H legal acquirer, correct? Yes, sir. But they have given non-current assets ka fair value. So what I will be doing is, here I will be taking the 2400, current assets I will be taking 1000, non-current liabilities 700, and current liabilities 800, which means 2400 plus 1000 minus 700 minus 800, which is nothing but 1900 is nothing but the net assets. So my consideration is more than the net assets, therefore I will be getting the goodwill. That's it. Now if you pass the journal entry, you have to take over the assets and liabilities of accounting acquiree, that is H Limited. So non-current assets will be taken over, current assets will be taken over, current liabilities also will be taken over, and credit will be given to consideration or investment, whatever you can say. Balancing figure is nothing but a goodwill, guys, and this consideration is basically issued by giving equity share capital. This consideration is issued by giving what, guys? Equity share capital, correct? Yes. Now if you calculate the consolidated books, guys, they separate financials, there will be no change, because this you have to check. Financial asset investment is nothing but 2000, so that is the common thing which we have to understand, but this consolidated thing is little bit important. Okay, fine, sir. You will be taking carrying amount of S Limited, plus you have to take fair value of H Limited. Okay, that is the logic, which means this entry you have to give incorporation to that parts. Okay, that's it guys. So this will be 2400, where it is 2400 non-current assets plus 3000, which will become 5000. So everything is same guys. Goodwill you have to take 100, current assets 2000. Sir, have you got, sir? See, they are nothing but 1000 for this and 1000 for this. There is no change, so I have got the 2000 here. So I will be getting this at 7500. If you add this consolidated value ka equity and share capital is the one which you have to understand this guys. What you have to take directly is whatever the value which is there in the books of S Limited, that book value you have to take, plus whatever the consideration which I have given, which is nothing but this PC I have to add directly. Sir, what is the PC, sir? PC is nothing but 2000. Correct? That is the thing which you have to add, and here you will get 2800. Other equity is having 1600. Non-current liabilities are there, current liabilities are there. If you take the total, it will come to 7500. Guys, other things are very simple, so I have not focused at all. I have just explained you the accounting treatment. This I have explained. This goodwill calculation I have explained. Deemed or notional consideration also I have explained. That's it guys. This is one of the reverse acquisition question which they have given. Okay, fine. So now let us check another question which they have given in this reverse acquisition concept. If you check, let us check this question number 16, which is also very important. Fine, sir. So yes guys, now the next question. DA Limited and TA Limited were amalgamated to form a new company which is Data Limited. Guys, this I have explained this concept. This is merger in the nature of reverse acquisition. This is very simple guys, which issued requisite number of equity shares. The same thing which I have explained as a concept of 10 rupees to take over the businesses of DA Limited and TA Limited. This is simple guys. I have already said that the abstract of balance sheets they have given. If you check, this is the part which I want. The control of Data Limited is taken by the management of TA Limited. If you observe, this Data Limited is nothing but legal acquirer if you observe. But because of the word which they have given here, they are saying that control of Data Limited is being taken by TA Limited, which means it is nothing but accounting acquirer. So simple. Our reverse acquisition is pretty simple. You just have to do accounting as if this TA Limited have acquired DA Limited. That is the concept. Clear? Yes, sir. Sir, now what is the thing which I have to take care of? It is very simple, guys. First of all, this fair value of business I have already given. Consideration which they have given is totally irrelevant. You have to take the fair value of the businesses, which means 7,500 and 15,000 you have to take. Data Limited will issue requisite number of shares based on this value only. Correct, Baba? Yes. So now I have to calculate the deemed consideration, which is nothing but how much consideration will this TA Limited will be issuing to DA Limited is what I have to calculate. That's it, guys. Yes, sir. That is very simple. Sir, how many shares this TA Limited is having, sir? Guys, TA Limited is having 1000 shares, because if you check, they have clearly given here 10 rupees. So equity share capital is 10,000. I think it is in lakhs, which means how many shares are having by TA Limited, guys? Guys, it is nothing but 1000 lakh shares are there na. Correct ya nahi? This can be also calculated like this. See, like 1000 lakh will be there. Correct or not? So in order to maintain this ratio, in order to maintain this 1/3, 2/3 ratio, how many shares it can give to DA Limited? Guys, it is nothing but 500 lakh shares have to be given to DA Limited. The same calculation they have did in some another manner, guys. They have given the fair value of this, and the fair value per share you have to calculate. Sir, how I will be getting per share of TA Limited? 15,000 by 1000 into 15 you have to take, and this much consideration will be given by issuing equity shares, which means this 15 is the fair value and your consideration is how much? 7,500, which means how many shares have to be given to you? 500 lakh shares have to be given to you. Correct ya nahi? Yes, sir. But 500 lakh shares is there. Sir, what is the fair value? 15 rupees, which means 10 rupee will be going to equity share capital and 5 rupees will be going to securities premium, guys. That's it, sir. I have understood the whole logic. So now if you calculate the consolidation, see, you have to do accounting as if TA Limited acquired DA Limited, which means you have to take TA Limited का carrying amount and DA Limited का fair value. That's it. So if you check, TA Limited is there, 8,000 is the carrying amount, plus I have to take DA Limited ka fair value, which means in the consolidated balance sheet the value of the PPE will be nothing but 16,000. If you look at financial assets, there is no fair value, so I will be adding these two figures. So my fair value will be, my assets will be 1300. If I check financial assets also, financial assets done. Next, if I check current assets, here I am having 6,500, plus I will be adding the fair value of this, which will come to 11,500 guys. If I take the total, I got this 28,800 lakh. Correct, sir? Yes, sir. If you calculate this equity share capital, guys, total 1,500 lakh shares have been given, which means 1,000 earlier shares plus 500 lakh shares will be given of 10 rupees. So because of which my capital will be, if you observe, this 10,000 will be there, plus instead of the 6,000 I will be issuing 5,000 equity shares. So my total will be 1,500 shares into 10 rupees is the face value. So 15,000 will be the share capital. If I take the other equity, I will be taking the carrying amount of this, that is 1,000 rupees, plus securities premium will be coming and sitting. This 500 will be there. So if you look at this part, okay, there is one thing you just have to calculate. Another thing, guys, that is nothing but a goodwill or gain on bargain purchase. Yes, sir, goodwill or gain on bargain purchase also you have to calculate, Baba. For this you will understand, sir, how I will be getting this gain on bargain purchase. Guys, simply you have to calculate the PC minus you have to do identifiable net assets. Sir, where they have did the calculation, guys, I think they have forgotten to do the calculation, but you can do the calculation, guys. Sir, if you take the identifiable net assets, it is very simple, guys. Sir, how much is the identifiable net assets? Is nothing but, see, 8,000 is there PPE ka, plus current assets ka fair value is 5,000 rupees, plus if you check this current assets, okay fine, financial assets ka fair value is 800 rupees. So if I deduct the borrowings and current liabilities, I have got the balance as 4,000. 2,000 put together, I have got the 4,000, which means my net assets will be 9,800 lakhs. Sir, my will be 9,800 lakhs. Okay, sir, fine, sir. So here, what is the thing which you have to understand is, guys, you have to calculate the purchase consideration. Sir, how much is the purchase consideration, guys? Purchase consideration is nothing but 500 lakh ka shares is there, multiplied by if you calculate, 1 second, guys. See, that is very simple. 1,000 lakh shares are for this, so 500 lakh shares are there, which will be issued at 15 rupees, which is nothing but 7,500. So my PC, here I will be writing, guys, PC is nothing but 7,500 lakh. But my identifiable net assets are how much, guys? Sir, it is nothing but, where I have written, this 9,800 lakh are there. Which means if I calculate, I will be having bargain purchase, that is nothing but 2,300. So this is nothing but gain on bargain purchase, which is 2,300. So my other equity, whatever the other equity which I am taking, I will be taking that, plus this 2,300 also will be there, plus this securities premium also will be coming and sitting here, guys. Fine, sir. Yes. So that's it. So with this, we have completed one very brilliant question. So which is nothing but DA Limited and TA Limited ka question. Fine, sir. Yes, sir. Now, let us check the question which they have given directly in the examination, and that is nothing but this question, guys. December 2024 exam, that is nothing but they have asked this question for 14 marks. Guys, if you observe whatever the question which we have seen just now I am saying, if you check this, here they have given 7,500, 8,000, 800, 500, 4,700, 6,500. If you check these figures, guys, this is nothing but exact double. 7,500 double to 15,000, 8,000 double to 16,000, 800 there double to 1,600, and 500 there double to 5,000. There we have 4,700. Here we are having 13,000, which means there we have 6,500. Guys, they have just doubled the figures and they have given the same to same question which they have been there in our study material. Even if they want to give any question in the exam also with respect to this reverse acquisition, guys, they will just do double or they will just make the half and they will directly give the question in the examination. Exactly same question, guys. LS Limited, MS Limited, formed LMS Limited. Purchase consideration also they have given fair value, same to same fair value of business, and this control of LMS Limited is taken by the management of MS Limited. So the same question, guys, just we have to do the double, just we have to double the calculations, that's it. So the entire question is exactly same. So with this, I'm not going to solve this question again, guys, because that will be a time wastage. So with this, we have also completed very toughest concept, but I think I have made it easy for you guys. So I want you to mention in the comments that whether after watching my video, are you able to solve the reverse acquisition ka question with ease or not? You just have to reply the same in comments. Okay, fine, guys. So next part, this is also very important standard from the exam perspective, very important topic from the exam perspective, guys. This is nothing but accounting for business combination in case of common control transactions. Clear, sir? Yes, sir. Here you have to understand, sir, what is the meaning of this word which is common control transactions. Guys, if you understand this common control transactions and the purpose for this accounting, like same manner how we have explained the logics for the different acquisitions which we have understood earlier, in the same manner I will try to explain the logic even for this common control transactions also, guys. So to sum up, sir, the meaning of this common control transactions is nothing but you have to take you have to take one line as the point of contact. Whatever before business combination which is there, that you have to compare, and whatever which is after the business combination is there, you have to compare. If any entity before the business combination and even after the business combination also, if any entity before the business combination and after the business combination is being controlled by a common party or a common company, then it is said to be common control transactions. Clear? Yes, which means you have to take even before obtaining the acquisition, before the acquisition or even after the acquisition, in both the cases control is lying with the same party, or I can say like this, control is being lying with the common party. Clear, sir? Yes, sir. For example, if you take, assume there is A Limited which is having two wholly owned subsidiaries. One is B Limited and another one is C Limited. Now what have happened is, assume like this, now this B Limited have gone ahead and acquired C Limited. If you observe the revised structure of this entity, A Limited is holding 100% shareholding of B Limited and B Limited is holding 100% of shareholding of C Limited, which means if you observe, this C Limited is ultimately being controlled by A Limited only. Guys, if you understand, earlier also this C Limited is controlled by A Limited, and even after the acquisition also this C Limited is being controlled by A Limited. So this is the classic case of common control acquisition. Yes, guys, we have understood the meaning of this common control ka acquisition. Sir, now what is the accounting treatment for this common control acquisition ka transaction? This is very simple, guys. If you observe, it is not a business combination in substance, rather I can say that they have just restructured their capital structure. I mean, they have just restructured their existing structure. It is not a total business combination in substance, but it is rather a mere corporate restructuring is what they will be saying. Okay, sir, we have understood the point. Here you have to understand, acquirer company is also called as transferee company, and acquiree company will be also called as transferor company. And one thing you have to remember, see, it is very simple, guys. The company who is transferring is called as transferor company, and it is nothing but acquiree. And the company basically who is purchasing, which is acquirer, is nothing but the assets and liabilities are being transferred to that company, therefore it is treated as transferee company. Yes, sir. One thing you have to remember, if you are doing accounting for the common control transactions, guys, whatever the method of accounting which they have prescribed is nothing but pooling of interest method accounting. Normally till now, whatever accounting which we have studied is also called as acquisition method of accounting. Okay? It is very simple, guys. It will say that, sir, we have to find out the date of acquisition. We have to take over the net assets of acquiring company at fair values. We have to calculate NCI. We have to calculate purchase consideration. We have to calculate goodwill. We have to calculate gain on bargain purchase. All these things, if you remember, whatever the things which we have discussed earlier, those are nothing but acquisition method ka accounting. Okay? Fine, sir. But now if you observe, whatever the method of accounting which we will be discussing for this common control transactions, it is nothing but pooling of interest method will be used. Sir, what exactly is this pooling of interest method used, guys? Sir, can you please help us understand? Guys, it is very simple. You just have to take the first three steps, that is acquire company, date of acquisition, purchase consideration. All these three steps are same as for business combination. Whatever the things which are there, you have to copy those things exactly as same. If you take the step number 4, guys, it is very simple. All assets and liabilities of the transferee company, all assets and liabilities of the acquiree company will be transferred at generally fair values. As per step number 4, acquisition method of accounting, all assets and liabilities of acquiree company will be transferred at fair values. But listen this, guys, if it is common control transaction, assets and liabilities of acquiree company will be transferred at book values only. Will be transferred at book values only and not fair values, guys. This is the first thing you have to remember. Next thing, while taking over assets and liabilities, which means net assets, you have to take one more item, guys, which is called as reserves and surplus also, which means any kind of other equity or whatever the reserves and surplus ka balance which is there in the acquiree company, that should also be taken over by the acquirer company. To sum up, the difference between acquisition method of accounting and the pooling of interest method of accounting is here only the first point you have to understand. In acquisition method of accounting, you will be taking over only the net assets, which means assets and outside liabilities only will be taking over, but that too at the fair values. But here if you observe, you will be taking over all the assets and liabilities, including reserves and surplus of acquiring company, but at book values only, which means there is no scope for you to take the net assets at fair values. This is the basic and the most important difference which you guys have to understand. Here there are no fair values and you have to also take over this reserves and surplus ka balance also of acquiring company. And another thing, guys, this is the first step which you have to give your 100% attention. Step number 5, guys, there is no NCI only. Guys, step number 5, there is no NCI only in this case. Okay, sir, we have understood that there is no NCI. Step number 6, if you observe, you have to calculate capital reserve. Sir, what is the capital reserve? It is very simple, guys. Sir, why you have written only capital reserve? Just give me 2 minutes. You will be understanding why I have written only capital reserve. Okay, fine, sir. Guys, it is very simple. You have to take the purchase consideration. You have to add plus NCI, but here NCI itself is not there, so you will be directly deducting net assets, but here you have to write including reserves taken over of the acquiring company. You will be writing, Are Baba, if the difference is positive, earlier I said that you will be getting goodwill. Clear? If the difference is negative, I said that you will be getting gain on bargain purchase. So here comes the second difference, guys. Even if you have the difference is positive, you cannot call that amount as goodwill. The standard rather suggests you to call the name as loss on restructuring, and the treatment of this loss on restructuring is nothing but it will be debited to the capital reserve account. The second part, if you observe, if you are getting any gain on bargain purchase, this will be treated as gain on restructuring, and that will be credited to capital reserve. Sir, whatever you are saying is, we have understood one thing. If we are getting a positive balance here, you are saying that you should not record that as a goodwill. That is the only thing which the standard is suggesting us to understand or interpret. Sir, can you please give us the logic here why goodwill will not be recorded? Yes guys, I will definitely explain you the logic. Guys, if you observe the whole concept of this common control transactions, you will be understood that the control before the business combination and even after the business combination is also with the same persons. Which means try to understand the logic, guys. Most companies, if this pooling of interest method is not there, what will be happening by the most companies is they will be forming some group companies, and obviously they will make some acquisitions within the group. Still the common control is there. With the same common control only, they will be forming different structural formations they will make within the companies. And if this pooling of interest method is not there, they will record their assets and liabilities at fair values. Correct or not? Yes, sir. What will happen if they have record their assets and liabilities at fair values? Guys, if you compare the consideration with the fair values, if you compare the consideration with the identifiable net assets, they will inflate their fair values and they will be calculating huge goodwills. But if you observe, since the control is there with the same parties, they are making huge profits in the name of business combinations. If you observe, nothing is actually there. All those things are fictitious. Companies are taking advantage of this fictitious kind of a business combinations, and they are recording some kind of goodwill in the common control transactions. So the standard have triggered this point, and now the standard is suggesting us some different kind of treatment. The first loophole was plucked. Like, you have to record all the assets and liabilities, including the reserves and surplus also, at book values only, Baba. No fair values are entertained in common control transaction. Okay. Now another loophole is also being plucked. Are Baba, even if you are getting the positive part difference here, you should not record the same amount as goodwill, but rather you have to treat that amount as loss on restructuring, and that will be debited to the capital reserve. The concept is very simple, guys. Sir, the whole thing, whatever is the discussion which I have made just now is given in appendix number C of Ind AS 103. There they will clear-cutly explain that, Are Baba, in case of common control transactions, please don't record the goodwill on acquisitions, because many companies will take the advantage of this. So no fair values, nothing, even no goodwill also. So whatever the restructuring loss you are getting, that will be still debited to the capital reserve, and that will be adjusted internally only. This is the first point which you have to understand. But you have to remember one more thing, guys. There is some little bit contradiction between this appendix C of the Ind AS 103 and our beloved institute. If you observe, what they will be doing is, Are Baba, if this thing is positive, instead of writing this loss on restructuring, our institute is writing this as a capital. Sorry, our institute is writing this as a goodwill only. So you have to understand there is some difference in the concept of this common control transactions, but trust me guys, this according to me is totally wrong by the institute. I hope it will correct in the future, but as of now what you have to understand is this Appendix C of Ind AS 103 is clear cutly saying that Are Baba, don't record the goodwill on common control transactions because many companies are publicly misusing this point now. So public may get cheated because of the fictitious goodwill which is being appearing because only of these business combinations. So the standard is suggesting you not to record the goodwill here, but our beloved institute is still calculating if we are getting a positive difference and they are naming it as a goodwill only. So what you have to understand is Baba, simple part, you can name it as goodwill only in order to get full marks. Guys, later if the institute corrects this thing and if instead of goodwill they are writing this lost on restructuring only, I will be giving you an update regarding this. But as of now, by the time you are watching this video, in case of common control transactions also, still you have to treat the difference in positive amount as goodwill only. Guys, I hope I have cleared this point to you. The second difference, the first difference between the institute's approach and the standard setters ka approach, I think I have made it clear. Fine sir, super sir. Next part, if you check journal entry on date of acquisition by the acquirer company, guys, this is very simple na. Assets taken over you will be taking, liabilities taken over also you will be taking. Most important thing guys, even reserves also you will be taking of the acquiree company. And the next part guys, purchase consideration also you will be taking na. And if you are getting a debit balance ka difference, as per standard you have to record this as a loss of restructuring, but according to our beloved institute you have to record this as a goodwill only. Guys, here is a small mistake. It is not transferor company guys, it is nothing but transferor company, which is also called as acquiree. Clear sir, this journal entry is the important thing guys which you have to remember. Understood sir? Next, consolidated balance sheet ka part is very simple. You have to take all items, that is assets, liabilities, share capital and reserves and surplus of acquirer company as on date of acquisition at carrying amounts only, and you just have to give the effect of this journal entry. Guys, I think I have made it clear. Sir, whatever exactly you are trying to explain in this part will be clear cutly explained while solving the questions. But I want you guys to have a complete clarity regarding the concept. Fine, sir? Yes. Institute's approach, record the goodwill even if you are getting a positive difference. But as per Appendix C of the Ind AS 103, Are Baba, there will not be any goodwill in acquisition of a common control transaction. But still there is some difference between the institute's approach and the standard. Sir, what we have to do? Are Baba, just blindly follow the institute only until and unless there may be some change in the future regarding this part. Clear? Yes, sir. Now, another thing you have to understand, guys. This point is also a little bit important. Sir, if merger is happened, and if that merger is in the nature of common control, sir, how we have to perform the accounting, guys? This is also the most important thing which is according to me. Sir, first of all, what is the meaning of merger? Are Baba, merger is nothing but there are two companies, they have combined and assume they have formed one new company. Whatever the old companies which are there, sir, they have closed to exist. They are not existing now. In this kind of acquisition, if I mix the common control concept, it will become like this. Assume Mr. A is there who is controlling A Limited, and assume there is another person B Limited, assume there is another company which is B Limited. It is also being controlled by Mr. A. Now what you have to do? After acquisition, what have happened? This A Limited and B Limited have formed together and they have formed a completely new company which is called as AB Limited, and still it is being under the control of Mr. A. If you observe, before business combination also both are controlled by same person, and after business combination also these both, the company is being controlled by the same person, which means this is the merger in the nature of common control transaction. Sir, how to do the accounting treatment for this, guys? Here also you have to do simple thing, guys. The acquirer company will apply the pooling of interest method. Sometimes, remember my word very carefully, guys, if the purchase consideration is not given in the question directly. If purchase consideration is not given in the question directly. Arey Baba, if they have given in the question directly, super. Institute is great. You have to follow the institute ka point. Otherwise, sometimes they will say like this, you have to issue requisite number of shares to discharge the claims of both transferor companies. Sir, here what I have to do, sir, simple Baba. PC shall be calculated as follows. Listen, only two words. PC shall be calculated as follows. Sir, what basis I have to take? Arey Baba, simple, you have to take net assets. You have to take net assets, sir. But while doing the common control transactions, you are asked you to take over even the reserves also, na. So while including net assets, don't forget to include the reserves also. Don't forget to include the reserves also, which means I will write like this: total assets minus outside liabilities minus reserves and surplus. I will be getting two figures. Two companies ka figures I will be getting. I will be adding those two figures and I will be getting the total purchase consideration. Guys, listen to this very carefully once again. Guys, your PC will be discharged in the ratio of net assets, but while calculating the purchase consideration, please take the value of net assets including the reserves also of both the companies and please add that figure. And that figure will be apportioned between the two companies in the ratio of net assets only. Have you understood the point or not, guys? Because this is the crux of this point, which is nothing but a common control transaction. I hope most of the students have already caught what I am trying to explain. If you have still any doubt, after solving the questions, your entire doubts are going to be resolved, guys. So if you understand the logic, if you are fine with the concept, now let us start with the questions of the common control transactions, because these are the last topic which we are going to cover karke. Okay, fine, sir. So now if you check, fine, sir. So the very first question which we will be solving is, guys, this is an our study material ka question only. So let us understand this question quickly. So just a moment. Yes, fine, sir. This is a classic question of external reconstruction. Sir, first of all, can you please let us know the meaning of this external reconstruction and all? Simple, guys. This external reconstruction will be generally taken place in a scenario like this. Assume there is one company which is having n number of litigations, because of which it is unable to continue its business effectively. So what it have decided is, it have just decided to continue the business but with a different name, but with a new trade name or new brand name, or I can say like this, with a completely new set of company. Okay, so now the entire company is new, but it is still being controlled by the same persons. In order to remove those full-fledged litigations which are being faced by the company, what they have decided is, okay, let us run the same business but with a new company which is being controlled by the same management as before. So if you check, on 31st March, they are saying A Limited externally reconstructed into B Limited. B Limited issued 80,000 equity shares at the nominal value of 10 rupees per share, and they have clear-cutly given the book value of A Limited ka net assets were 12 lakh rupees. The fair value of the net assets were assessed as 15 lakh rupees and show the journal entries complying the Ind AS. You have to think. Okay, fine sir. If you check the first point, they are saying that since it is externally reconstructed, obviously the control will be there at the A limited ka earlier management only, which means they are saying that it is a classic case of common control transaction. The question have given the information till here only, guys. But if you remember, I have explained that in case of common control transactions, fair value of the assets is irrelevant for us, because you have to take over all the assets and liabilities of the acquiring entity, at which values are book values only you have to take. And another important point which I have mentioned is, Arey Baba, you have to take over even the reserves of the acquiring company also. You have to take over the reserves of acquiring company also. If you look at the question is not clear about the reserves balance of the acquiring company. Of course, the question have said this point, book value of A limited ka net assets was 12 lakh rupees. Net assets value is how it will be calculated, sir. It is nothing but total assets minus outside liabilities. But the question is silent about the other equity. But if you look at the answer which they have been given in the question, they have taken the assumption that this other equity is nothing but 6 lakh rupees. Which means they are saying, since your net assets are 6 lakh, see, the formula for net assets is what, guys? Net assets is nothing but total assets minus outside liabilities. Also, there is another formula for this. It is nothing but share capital plus reserves and surplus. If you look at the question, there is no information with respect to the share capital and reserves and surplus, but we are having the total value of net assets. But if you look at the answer, they are saying we have other equity ka balance which is nothing but 6 lakh rupees, which means indirectly they are saying this share capital is nothing but 6 lakh. Sir, without this information, I cannot solve this question. So this is not there, what should I say? This is not there unfortunately in the question, but they have solved the question based on this assumption only. So I will be continuing this assumption even here as well. Sir, now what will be the journal entry? Arey Baba, simple. First of all, you will be taking over the net assets account debtor. Sir, how much is my net assets? Guys, they have clearly said that net assets will be taken over at how much, sir? 12 lakh rupees. Fine, sir. Yes, sir. Two Baba, you have to write the consideration ka part. Sir, how much consideration they are paying, sir? If you check the question, they are clear-cutly saying that consideration is nothing but 8 lakh equity shares at the nominal value of 10 rupees, which means how much, sir? To consideration, it is nothing but 8 lakh rupees, Baba. Sir, fine, sir, it is 8 lakh rupees. If you check, they have given other equity also, because obviously this will also be taken over na. So if you calculate, this is nothing but 6 lakh. Sir, where is the difference in figure coming? Is it coming in debit side or credit side? Arey Baba, simple, it is coming in debit side. Sir, how much is the amount? Arey Baba, that is nothing but 2 lakh rupees. Strictly speaking, this 2 lakh should be treated as loss on restructuring, but our institute have assumes this amount as goodwill only, and hence we will also follow the same structural approach. So the answer is goodwill. 2 lakh rupees, 8 lakh, 6 lakh, 12 lakh. If you check, 2 lakh, 8 lakh, 6 lakh, 12 lakh. And here is how you have to solve this question. Again, I am saying, guys, the question is silent about the reserves and surplus, this other equity ka part, but the answer have been solved on the basis of this. So I am also continuing my approach in this question as well. Clear, sir? Yes, sir, we have understood the point. Okay, now the next question, if you check, we have question number 12, which is nothing but it is a common control transaction in the nature of merger. In the nature of merger. This is very simple question, guys, so let us quickly understand this question. Okay, sir? Yes, sir. Fine, Baba. Next question. Simple, sir. A limited and B limited were amalgamated into C limited. Fine, sir. Which means they are saying Arey Baba, we are having this A limited also, we are having this B limited, and both have merged together and they have formed one new company which is called as C limited. So they are saying control of the businesses lying with the same parties as before, which means the question is giving us the hint that this question is related to the common control transaction. They are saying C limited have issued 80,000 equity shares to A limited and 75,000 equity shares to B limited on the nominal value of 10 rupees per share. Sir, what they are clear cutly saying is simple, Baba. They are clear cutly saying that it have issued 80,000 equity shares and 75,000 equity shares to B limited of how much? 10 rupees per share. Which means if you calculate the purchase consideration and all will be calculating, but just first read the question. The book value of A limited ka net assets they have given 12 lakh, equity share capital 5 and other equity 7 lakhs. Guys, if you observe here they have mentioned this part. Net assets, equity share capital also I have explained, and other equity also they have given. But if you check the previous question, unfortunately they did not given this information, but we have rectified that part. Clear, sir? Fine, sir. Okay, now the fair value of the net assets of A limited, they are saying it is 16 lakh rupees. But again I am saying, guys, since this is a common control transaction, this fair value is totally useless for us. Next, if you check the book value of the B limited ka net assets 10 lakh rupees they have given, equity share capital 4 lakhs, other equity is 6 lakh, and the fair value of net assets of B limited was assessed at 15 lakh rupees. So this is also irrelevant. The question is asking us to calculate the journal entries complying the Ind AS ka part. Simple, guys. They have already clear cutly explained the question. To A limited they have issued 80,000 equity shares into 10 rupees. So the consideration which is paid to A limited is nothing but 8 lakh. Correct ya nahi? Yes, Baba. Consideration to B limited, if you calculate 75,000 into 10 rupees, which means 7,50,000 now. If I calculate, I will be getting 15,50,000 will be my total purchase consideration. Guys, if you remember, I have to take over even the other equity of acquiring companies. Sir, other equity of acquiring companies, how much, sir? Arey Baba, for A limited it is 7 lakh rupees and for B limited it is 6 lakh rupees, which means how much I have to take over, sir? A limited ka 7 and B limited ka 6, which means 13 lakh I have to take over. Clear, sir? Yes, sir. If you check the total assets, if you check the total book value of assets, for A limited it is 22 lakh, for B limited it is 10 lakh rupees, which means I have to add this 22 lakh. I have to take over this 22 lakh also. Arey Baba, if you pass the journal entry, net assets 12 lakh you have to take over, B limited 10 lakh. To other equity 7 plus 6, 13 lakh you have to take over, and consideration is nothing but 15,50,000. But now if you observe the differencing figure, the balancing figure, it is coming at debit side. Strictly speaking, this should be loss on restructuring, but because of our institute, I am assuming this as a goodwill account, and the answer will be goodwill will be the balancing figure. So here I will be writing goodwill is nothing but balancing figure. Clear, sir? Yes, sir. We have understood this question. Now we have another important question, which is nothing but of this common control ka transaction, which is a merger related question. Fine, sir. Let us quickly check to this question. Okay. Yes, guys. Guys, this question is pretty important from my perspective. So I will be expecting you guys to listen this question with 100% of attention. Fine, sir. We will listen. This question is also, they are saying this is also a business combination which is under common control. If you check, they are saying DA Limited and TA Limited were amalgamated to form a new company which is Data Limited on 31st March 2021. Who issued? Here comes the most important, trickiest part of this question. Who issued? Sir, what they have issued, sir? Arey Baba, they have issued requisite number of equity shares of how much, sir? 10 rupees to take over the businesses of DA and TA. The abstract of the balance sheet of the companies they have given. Okay, sir, fine. DA Limited they have given, guys. TA Limited also they have given, and the new company ka Limited, that is Data Limited, also they have given. Fine, sir. If you check, they have given the PPE of DA Limited is 7500, TA Limited 8000. Thus, guys, the amount is rupees in lakhs. Fine, sir. If you check financial assets 800, 500, current assets 4700, 6500, equity share capital 6000, 8000. Other equity 3000, 3000. Borrowings 2k, 3k. Current liabilities 2k, 1k. And of course they have given the data limited cut things also. If you add these two figures, 15,500, okay sir, 800 plus 500, 1300. These two figures if you add, you will be getting this 11,200. That is nothing but this data limited ka figure. Sir, how they have calculated is they have just blindly added this DA limited ka and TA limited ka things. Sir, what is the question asking us to calculate? The question is asking you to calculate the journal entries in the books of DA, TA and data limited and show the balance sheet abstract after the merger. The question is pretty simple, guys. But here, I want you guys to understand one thing. Here, this is the part which I have written for you to understand that this question is related to the business combination under common control. But you have to tell me, ignore this part and you now read the question. Ignore this part and you have to now read the question and you have to tell me, sir, where in the question they have mentioned about the question is related to the common control transaction. I want all of you guys to pause this video and you have to find out, sir, from the question, this data, where you can say that the question is related to the common control transaction. This is the thing which you have to understand and tell me. If you observe, you have to pause the video and you have to find out, sir, how you will be understanding that this question is related to common control transaction. Okay. I hope you have paused the video and you have tried to analyze. Now I will explain the question. Now you have to try to understand. Guys, if you observe, the question have clearly said that there are only two companies, DA Limited, TA Limited, and both have merged together and they have formed Data Limited. There is no hint in the question that these both are under common control. Then, sir, how are you saying that this question is related to common control? Arre Baba, it is very, very simple. If you observe the balance sheet of this Data Limited, this PPE, sir, how this PPE have come? This PPE is nothing but the book value of DA Limited and TA Limited. Okay, sir. If you look at this financial asset, sir, how the financial asset of Data Limited have come? Arre Baba, it is also simple, but it is a sum of DA Limited ka financial assets and TA Limited ka financial assets. Sir, how about this current assets? Arre Baba, this current assets is also same figure. It is nothing but a sum of current asset of DA Limited and current asset of TA Limited. Understanding or not, guys? Yes, sir, we have understanding what you are exactly trying to say. It is nothing but assets and liabilities are taken over at carrying amount is what I am saying. Sir, if you check the reserves and surplus also for that matter, reserves and surplus of Data Limited is nothing but 6,000, for DA 3,000, TA 3,000, which means now I can confidently say that Arre Baba, this question is related to common control transaction. Fine, sir. Second point, I just wanted to ask you another question. Sir, in this case, what is the purchase consideration? Because they said that they have issued requisite number of equity shares, which means the question is silent about how many equity shares are issued to DA Limited and TA Limited. If you observe, I have already explained how to calculate that part. First, what you have to do is you have to calculate the net assets including the reserves taken over of the transferor companies, which means simple Baba. Let us check this calculation. Fine, sir. You have to take total net assets including reserves you have to take. Sir, how I will be getting this total net assets including reserves? Simple Baba. If you want to calculate the total net assets, sir, how I will be getting the total net assets? Guys, there are totally two formulas for you to calculate the net assets. The first one is nothing but total assets minus outside liabilities. Arre Baba, this is one formula na. Sir, other than this formula, we are having a new formula which is called as, it is not a new formula basically, share capital plus other equity. In this case, we are approaching the second formula. So first you have to calculate the equity share capital, which is 6,000 and 8,000 lakhs. So my total is nothing but how much, sir? 14,000 lakhs. Just for fun, please add the other equity ka part also, and you please calculate the equity. Now this part is nothing but my net assets. The new purchase consideration which I have calculated will be allocated to DA Limited and TA Limited in the ratio of their net assets, which is nothing but 9,000 and 11,000. But now you have to tell me, sir, what is the purchase consideration of the, what is the purchase consideration which is being paid by the Data Limited, because we have calculated the ratio. And now I will be explaining while calculating purchase consideration. Arey Baba, take net assets including the reserves and surplus also, which means now the formula is total assets minus outside liabilities minus other equity, which means now the formula is nothing but simply I have to take only this share capital, guys. So this share capital will be nothing but my purchase consideration, and I will be discharging this purchase consideration in the ratio of their net assets. This is the only thing which you have to understand, guys. So which means nothing but the total of share capital is my purchase consideration, and this will be distributed between DA Limited and TA Limited in the ratio of 9:11. In the ratio of 9:11. So simple, guys. Now if you look the question, they are asking you to calculate journal in the books of DA, TA and Data Limited. First what we will be doing is, first let us directly go to Data Limited, because we have already know this purchase consideration. So let us directly go to the accounting treatment for this Data Limited. If you look, first we have to incorporate the net assets of the DA Limited and TA Limited. PPE account debtor ka 15,500. Sir, how I got the 15,500? Arey Baba, simple. PPE 7,500 plus 8,000, you will be getting 15,500. Sir, clear ya nahi? Clear Baba, clear. In the same manner, current assets also I will be adding, financial assets also I will be adding, to consideration also I will be adding, to borrowings also I will be adding, to current liabilities also I will be adding. Sir, what is the balancing figure? Arey Baba, that the balancing figure is nothing but other equity, which is 6,000 lakhs. If you check 15,500 plus 11,200 plus 1,300 minus 14,000 minus 5,000 minus 3,000 minus 6,000, which means there is no goodwill in this case. And this consideration account to equity share capital is nothing but a common entry, guys. So which I will be getting this balance sheet ka figure. So this is this much simple, but with respect to the newly acquired company, which is Data Limited. And the other part is very much simple, guys. If you'll observe, I will explain you the entry for this DA Limited, because other assets are very simple. The TA Limited is exactly same as this. Sir, first what we have to do? Arey Baba, simple. DA, TA both have formed Data Limited, which means after business combination, DA Limited and TA Limited will not be there only. First of all, these two companies will be lost completely. Sir, then what will happen? Arey Baba, then what will happen means, whatever the net assets which are there for this DA Limited and TA Limited, everything will be closed and everything will be transferred to something called as realization account. Arey Baba, this question we have already did one similar question. So simple, all the liabilities will be debited now, borrowings and assets will be credited. RE, PE, PPE account, current assets, financial assets, everything will be transferred to realization account. So obviously the balancing figure will be transferred and sitting in realization account. And if you check, the equity share capital and reserves and surplus will be transferred to realization account. Sorry, equity share capital and other equity will be transferred to equity shareholders account. Now this equity shareholders, now whatever the equity shareholders are there, their balance also will be transferred and sitting to realization account. And whatever the shares in Data Limited, which means the 6,300 which is being issued to the shareholders, first it will be transferred to realization account, and ultimately the equity shareholders will be given as shares in Data Limited, and that is nothing but the 6,300, and the differencing figure is nothing but this 2,700 is the loss on realization, and that will also be carried forward and that will also be transferred to the equity shareholders ka account. In the same manner, this will also be happen. TA Limited ka accounting. So that's it, guys. The question is this much simple. Okay. Yes, guys. So yes, guys. So now the next concept is the concept of demerger. Sir, what is the concept of this demerger? Guys, you have to understand the concept of this demerger, because this is also a little bit tricky point is what I can observe. Fine, sir. Let us take one example so that you will be easily understanding. Okay, sir. First one. The meaning of demerger is nothing but an arrangement where a part of a division of a company, which is known as demerged company, is transferred to another company, which is called as resulting company. Sir, what exactly is this? Let us take one example so that you will be easily understanding. Assume there is one company which is known as Reliance Industries Limited. It have several divisions. Assume it is having mobile division separately. Assume it is having consumer division separately. Assume it is having real estate division separately, and assume it is having energy division separately. Okay, divisions are there, but what they have decided is this mobile division needs to be focused a lot in order to make it as a profitable venture. So what these persons are doing is they have decided to separate this Geo Financial Services Limited, which will be now running under a completely new management, which are having the potential, which are very much intellectual, and they are exactly having the potential to revive this company, and they have the ability to convert this into a profit making one. In order to do this, obviously their company needs to get separated. So what they did is they have divided the company. They have transferred some part of assets and liabilities of this Reliance Industries Limited to nothing but Geo Financial Services Limited. Now students will get some question. Sir, you said that assets and liabilities of this Reliance Industries Limited will be transferred to Geo Financial Services Limited. Sir, how about the equity share capital of this Geo Financial Services Limited? Sir, who will purchase the shares of this Geo Financial Services Limited? Whether the shareholders will purchase again it from the outside market, or whether this Reliance Industries Limited will be paying the consideration to any other persons. The right answer is, if you are a shareholder of Reliance Industries Limited, you will be definitely given one share for this Geo Financial Services Limited also. Which means if you observe, whoever the parties which are controlling this Reliance Industries Limited, those are the same parties which we will be controlling this Geo Financial Services Limited. Because the reason is very simple, guys. Shareholders of this Geo Financial Services Limited are nothing but the shareholders of this Reliance Industries Limited only. Which means in all the cases, this demerger is in the nature of common control is what you have to understand. Arey Baba, if common control is there, you have to understand, sir, pooling of interest method accounting will be applicable. And another part, guys, fair values will not be recorded. You have to do all the transactions at the book values only. So now you have to understand, this Reliance Industries Limited, whose assets and liabilities are being transferred, that company is known as acquiree company, and it is also called as transferor company. And this resultant company will be called as acquirer company. Sir, now who will obtain this? Who will apply this resulting company? I mean, this business combination ka accounting? Acquirer company na baba. It will apply pooling of interest method, same as accounting for business combination, except one thing. Now, reserves of demerged company will not be taken over. The reserves of demerged company will be remaining with the demerged company only. Okay, they will be giving you the reserves and surplus of the resultant company also separately, but you should not transfer the reserves and surplus of that entity करके, ठीक है? Yes, sir. So accounting treatment in the books of demerged company, how you have to understand is, liabilities will be transferred to resultant company, and assets also will be transferred to resultant company. See, from demerged company, you are dividing the assets. Some liability is already there with the, demerged company. So that will be transferred to the resultant company. So whatever the liability which I have transferred to resultant company, I will be debiting that. In the same manner, whatever the assets which I will be transferring to resultant company, I will be crediting that. So whatever the difference, loss on restructuring, gain on restructuring, that will be transferred to the capital reserve. Understood, guys? That's it. As long as the question mentions nothing, you have to understand that this demerger is nothing but in the nature of common control only. But if the question specifically asks you to apply the demerger in the nature of business acquisition, guys, you have to understand this thing. Resultant company will be applying acquisition method, same as accounting for business combination, which means you have to record the goodwill, fair values, and all the concepts which we have already known those points. Understood? Yes, sir. So now, without making any late, let us take this question, Baba. They will say that AK Limited is operating through two divisions, A and B. Division A has been generating steady profits while Division B has been consistently incurring the losses, which means indirectly the question is giving you the hint that they are planning to close this Division B. The draft extract they have given, fixed assets also for both put together, net is A Limited 200 and B Limited 450. So the total they have given, guys. Current assets they have given, current liabilities also they have given, and loan funds they have given some 600, 600, 1200. Capital they have given, guys, 50. Surplus, reserves on surplus they have given, which is nothing but 450. So if you observe, this is nothing but the loan funds. Okay, fine, sir. This is nothing but the loan funds, which is 0 and 700 for the B Limited. Now what they are saying is Division B along with its assets and liabilities was sold for 50 crore to ASN Limited. ASN Limited have allotted 2 crore shares of 10 rupees each to each members of the AK Limited. Who have got the shares, guys? It is the shareholders of AK Limited who have got the shares. If you observe, at a premium of 15 rupees per share, premium of 15 rupees in full settlement of the consideration. See, they are saying face value 10 rupees and they are saying premium of 15, which means they have issued at 25 rupees. And they are saying one of the members of AK Limited is having 52% of the shares in the company. Are Baba, they have indirectly giving us the hint that this is related to common control transaction. So what is the first part they are asking? They are asking you to prepare the journal entries in the books of AK Limited. So AK Limited money, demerged company is what they are asking, Baba. Sir, how I have to prepare this? Simple, Baba. Liabilities transferred, which means this current liabilities will be debited, guys, 750, and obviously this loan funds also will be debited. And if you observe, this provision for depreciation also will be debited. If you look at the assets ka side, this fixed assets will be debited and current assets also will be credited, guys. Sorry, this will be credited. If you check, loan funds debited, current liabilities debited, provision for depreciation debited. These two, fixed assets and current assets, will be debited. The difference is being there in this 100, the credit side. Therefore, that will be treated as a capital reserve, or this can be treated as gain on restructuring. Anything is same, Baba. Understood or not? Fine, sir, we have understood. Next part, if you check, second thing they are asking, you have to prepare the balance sheet of AK Limited after passing the entries in one along with the notes to accounts for the other equity. Simple, guys, you just have to give the effect of this entry in this balance sheet. That is the thing which you have to do. PPE 200, you have to deduct the 1200. That's it, guys, very simple. Okay, you have to give the effect of this entry to the what should I say, this total ka figure, then you will be easily getting the point. If you look at the share capital, they have just given a disclosure as to what exactly have happened in this case. Okay, Division B is transferred into new incorporation company, which is having how many equity shares they have issued and all they will be explaining in the notes to accounts. Understood? Yes. The third point, if you observe, they are asking you to prepare the balance sheet of ASN Limited along with the notes to accounts for the share capital. ASN Limited, if you observe, whatever the net assets which you have taken over there, that entry will be exactly reversed. Sir, how? Property, plant and equipment 450, current assets 900, which means the total will be this much. Equity share capital is how much, sir? 20, because 2 crore into 10 rupees will be your face value. Sir, what about this other equity? Simple, Baba, other equity. Sir, whatever the existing balance is there, that is 100 rupees will be there. That is 100 rupees will be there, na? And whatever the balance which is there, that capital reserve ka balance will be taken over and other equity ka balance. Sir, how you have got this other equity ka balance? Just a minute, guys. They are asking you to prepare the balance share capital of ASL Limited along with notes to accounts for the share capital. If you check this part, this thing, issued and paid up capital is nothing but 2 crore equity shares of 10 each fully paid, which means 20 will be there. So this other equity ka part 100 will be there, and 1 second. Okay guys, first what let us do is, let us try to pass the journal entry which will be passed in the ASN Limited. Sir, what I will be taking over is, first I will be taking over the assets. If you observe, this is nothing but PPE account data 450 I will be taking over, sir. Yes sir, 450 will be taking over. And next, if you observe, I will be taking over the current asset also. Yes sir, you will be taking over the current asset also, which is nothing but at 900 baba. If you look at borrowings, the borrowings is how much, sir? 700 and current liabilities to 750. To borrowings it is 700, to current liabilities it is nothing but 750. And if you check to equity share capital, they have given 20. Sir, where is the balancing figure, sir? 450 plus 900 minus 700 minus 750 minus 20. If you observe, we are getting the difference in this 120, guys. So what I said is, as per Appendix C of Ind AS 103, what you have to do? Arey Baba, as per Appendix C of Ind AS 103, here I have to write something called as loss on restructuring account data, which means this will be definitely going and sitting in other equity only. But we have already discussed, sir, our institute would not like to call this as loss on restructuring. Then what your institute will love to call this, guys? Sir, our institute will love to call this as goodwill na. But wait. In our workbook, in our study material, whatever the questions which they have given, they have assumed this as a goodwill and they have solved the question like that only. But this is the question which is taken from the workbook, which are the new additional questions which they have been framed by the institute. So I have taken this question, and what they are trying to explain is, guys, in this question suddenly our institute have remembered the Appendix C of Ind AS 103, and there, instead of writing goodwill, they have written this as a loss on restructuring only, and they have written this 120 crores in other equity ka part only, rather than writing it as a goodwill. So this is the important point which a student have to observe. Sir, but earlier you said that you have to treat this amount as a goodwill. Arey Baba, that was not said by me, that was said by our institute only while solving all the questions in the study mat. But unfortunately, suddenly they have remembered this Appendix C of Ind AS 103, and now they are saying, Arey Baba, this is nothing but loss on restructuring, therefore it should be going and sitting in other equity, which means instead of goodwill, here I will be recording it as loss on restructuring, or whatever it is you can write, Baba. So the balance amount is nothing but 120 crores, and that is nothing but other equity. Sir, what we have to do in the exam? Trust me, guys, we have to wait till the further clarification on this institute, whether our institute is going to change the answers in the study material or whether they will change the approach in the workbook. Because whatever is correct also, this we have to write it as loss on restructuring only. We should not write this as goodwill. The logic, the reason, complete thing I have explained as to while explaining the concept itself. But my advice is, guys, if you want full marks, I think you can write like this. But you have to definitely give a note, and you have to definitely explain about this appendix number C of Ind AS 103 in order to get the full marks. Understood, guys? Yes sir, we have understood the point, sir.